Liquidity, light volume.
I hope we're going to see some action at the single stock level, because I doubt we're going to see it at an index level. Anyway, it is time for the opening trade. Let's take a look at the opening numbers here in Europe. Remember, London is out. That's a chunk of change in terms of the volume story out of Europe, so just bear that in mind. I think you're going to see a fairly quietish open in terms of the trading this morning. You're seeing a very quietish open this morning. In fact, you're getting, according to my screen, no trade. Oh, there we go. Phew, saved by the stock 600, which is up a staggering 0.02 of percentage points. So it's a busy start to this Monday morning, mid-August. I think we're going to see a quietish start to the week. We've digested Powell. We've got Nvidia to look forward to. We've got some data Friday. We've got London out, so we've taken that out of the board. But it doesn't look at an index level if we're seeing that much of an exciting session. So I hope, and I'm sure Ollie's going to tell me what the details are. We've got a great deal of rotation below the surface, and those single stocks, there's some cracking stories there as well.
Yeah, Guy, I'll see what I can do for
sure.
you. I'm not sure I can provide you with the sort of level of excitement that you'd like this morning, but from what I'm seeing in terms of the GRR, the sort of market movers, in terms of the different sectors on the stock 600 this morning, we have real estate up by about 1/3 of 1%, energy 0.2 of 1%, technology, the big loser this morning, it seems, down by 1/2 of 1 percentage points. Insurance is the sort of second biggest loser. They're basically more or less flat, but really it seems to be this morning the story is in real estate, which is catching a bit of a bid this morning, and technology, which is being sold off ever so slightly here, down 0.4 of 1 percentage point on the stock 600 group.
Yeah, well, let's look at who's actually behind that move. ASML is, of course, going to be your biggest index weight to the downside. SAP in the same vein. You're also seeing the likes of ASM as well, which is, of course, separate from ASML, and Siemens also taking a little bit of a hit as well. So there's plenty going on when it comes to, I think, the stock underperformance. Talking about the winners here, though, Guy, it's a little bit of the, well, initially it was the oil outperformers. Now it looks like, well, still the oil outperformers. A lot of the French stocks doing well in the absence of some guidance coming out of the UK.
Yeah, I'm not sure there's a lot going on. There's something going on. There are things happening.
Is up 4
London is closed. London is closed. It does take some of the heavyweights out of the market, but there are plenty of others. As you say, ASML and SAP. I think that's my only discernible kind of story here this morning, that we are seeing some technology weakness creeping into this market. It's going to be a big week in terms of that tech story. What are we going to see in terms of the read across from Nvidia? I think we'll wait until Wednesday evening before we get a clear guide on what is happening there.
Well, I also want to get a couple of checks on some of the stocks that we were talking about, the stocks to watch, because there is still some M&A talk at least. So even if these aren't confirmed reports, there is enough to move the markets here. Telecom Italia is actually open. Those shares higher by 1.4%. This has to do with that Vivendi stake as well. So the fact that you are seeing, again, light volume, light liquidity, etc., we're keeping an eye on it. Yes, go ahead.
The stock 600 is... You don't often see this, so this is kind of worth noting. The stock 600 is absolutely unchanged. I couldn't be less unchanged if it tried. Oh no, now we're down by 0.01 of a percentage point. But for a moment there, it was absolutely unchanged in terms of where we saw the story on Friday.
Well, we're going to keep an eye on it. We're still waiting for some of the markets to open. The Swiss market, for example, taking its own sweet time, frankly. We're always going to keep Novartis shares at top of mind. It's one of the stocks that was potentially going to be moving with some of that M&A news. But that is all that's going on the micro front. I want to bring it right back to the macro, because of course we heard from Jay Powell over at Jackson Hole. We also heard from I'm going to say this right, from plenty of ECB speakers as well. Take a listen to what they had to say.
Given the data that we have at the moment, I would be very much open for the discussion of yet another rate cut in September. But we'll see.
I think we have to look more carefully at the data I hope we can do it. I'm not against cutting.
The most likely move in terms of monetary policy is to continue cutting rates. So the easing process.
Would you like to give us a date on that so we can make some news today? Our colleagues at the ECB are like...
September, it's easy.
Some commentary coming out of the ECB Governing Council members, Martin Kazak's there, Robert Holzman, and of course Mario Centeno speaking to Bloomberg at Jackson Hole. I want to bring in another voice here. Dirk Sturfen joins us this morning, CIO for EMEA and Global Chief Investment Strategist over at Deutsche Private Bank. Dirk, a pleasure to have you on the program. Look, now that we're talking about this from a macro perspective, the ECB and the Fed seem to be on the same page. Are these rate cuts that are telegraphed on both sides of the Atlantic a tailwind for the stock market, or is this priced in?
Yeah, good morning. Love that discussion, by the way. You know, how long we can talk about 0% performance moves. So I doubt that these calm markets will stay like that. And much of that relates to what you just mentioned and asked about. So central bankers can give us some guidance, but not that much really, because we are still data dependent in our view. And I think that at least has been confirmed last weekend. So we are still in a situation now where inflation data will have to deliver. We are still in a debate about the state of the U.S. economy and, of course, also about the Eurozone. And if anything, we think that the market direction and also more so the macro direction would be more symmetrical from now on.
When it comes to, though, what is actually driving this market, and even though it does feel like from a monetary policy perspective, and arguably from a fiscal perspective as well, you see both sides of the Atlantic on the same page, it feels like inflation is still the story that is dominating the conversation in the States, whereas growth is more of the concern in Europe. And I'm curious how you price that in to a market that kind of seems to be doing the same thing at the whim of the U.S. rather than Europe.
Yeah, absolutely right. So if you look at the market pricing, we think that probably the market's take on the recent developments overall is a bit too dovish. So we would expect both central bank to be a touch more hawkish than what is currently priced in until Christmas. And it's puzzling to see at first sight that actually over the last 4, 5, 6 weeks, some more monetary policy easing has been priced in for the Fed and slightly less for the ECB. And the reason is clearly not growth. I mean, at some point it was when we had the raging U.S. recession debate. But if you look at it, a bit more medium term, it looks like the economic strength is largely missing in Europe as well. So it is about prices. And it is probably still about wages, and it is about looking into 2025 when we get the next negotiations, especially in Germany, and we will have to discuss the still quite significant loss of purchasing power we still have.
So, good morning, it's Guy. If the Fed cuts 25 basis points in September, do I buy stocks? If it cuts by 50 basis points, do I sell stocks?
That's a great question. So, normally you would say fear the cuts, right? Because if you look at the last decades, really, significant Fed cuts that went along with significant economic weakness, and that's clearly not a good sign for the market. So I would agree that if we only get 25 bips, that's probably market positive. And hopefully we can get this, when everything goes along, like a little bit better news on the macroeconomic front and a little bit less of a need for the Fed to cut 50 basis points.
Is the risk the bond market has done too much in terms of expectations? We've seen yields coming down really quite sharply across the board, particularly within the Treasury market. Has that gone too far?
I mean, we really liked the bull steepening, right? So first of all, we like the steepening, but also the bull steepening. We are all invested in bonds. And we think that this won't be the trade for the remainder of the year. So we think that there will be a little bit of renormalization, if you like, and slightly rising yields into year end and then also next year. But that should be, just a mild headwind. We still have very attractive coupons for the bond trade. And for stock markets, this should be manageable as long as it, as I said, goes along with a slightly better economic dynamics.
And we get sort of market pricing that's been jumping around on this sort of rate cut for the ECB in September, on September 12th. I mean, we woke up this morning, there was a 75% chance from the market that there's going to be a cut. Now we're at 98%. Do you think that September is a done deal? And do you think we could get anything in terms of data this week that could change the conversation around that?
I mean, we do think that, yeah. And I mean, central bankers will never tell us 100% what they will do. I mean, they can't commit that much. It will be data dependent, but it looks like the main central banks really sort of rhymed in for a September cut. So now it's much more about the size of the cut in the US, but I think communication is clearly going into that direction. We will have data, of course, over the next few weeks related to the job market, and this will probably now be the #1 decision factor for the US.
And since you're sitting in Frankfurt, and I usually am in Berlin, and you know, it's important for me to try to do this, and I have difficulty doing it. Is it possible to build a bull case for Germany right now, to invest in Germany, to sort of see the economy turning around anytime soon?
Of course. I mean, being based in Frankfurt, being German, I mean, Germany is simply not growing, right? So if we are talking about a potential, well, this looks like a global manufacturing recession. All the action is in services, and the German economy is tilted towards the other sector, right? So anything that is showing some improvement on the industrial side will be well received, of course. And then there's, I don't know if it's really a big problem, but if you look at the German consumer for now, it looks like many Germans are still saving for a rainy day. So it's, you know, the money is, I guess, there, but it tends to go into savings. And now that we have significant wage hikes over the last couple of quarters, that might actually lead to some better sentiment also coming out of Germany. I mean, but as you said, I mean, we're talking about the bull case here. So let's see how this will work out.
A lot more positive than I expected out of you, Dirk. But I'm curious, though, when it comes to the negative, how do you position against it? We had a guest on earlier in this program that was talking about kind of the commodity space and gold really being more of a positioning story, driven, of course, by the fundamentals, but really more of a hedge. And I'm curious, what is your go-to hedge in a world where maybe commodities don't play that role anymore?
I mean, we really believe in, you know, apart from the strategic asset allocation, which is arguably the most important one, we believe in tactical asset allocation as well. So it would be, in our view, also a lot about, you know, varying the degree of equity exposure overall you have. And then it depends on the problem you expect that might be coming, right? So in summer, we had this potential weakness in the US economy, so you didn't really need the dollar, obviously, right? So you lost on the dollar, so it wasn't a good hedge. But maybe looking forward, the dollar might find some more strength, especially when it comes to different type of risks. So we try to be active. We try to also use these more technical situations of sell-offs to rebalance the portfolio. So we try to close potential underweights in certain sectors and regions. And we also, as you know, we like to build a portfolio that is less dependent on just a bunch of stocks. So we like to add also on weaknesses some mid-cap and small-cap stocks, for instance.
Okay, Dirk, you're talking about significant stocks. NVIDIA reports Wednesday after the close. Is the market ready for another bounce of volatility? We've come back really strongly after the bout of volatility we had at the beginning of August. Do you think we are done with volatility for now, or do you think actually the catalysts for volatility are growing?
We actually think that volatility will be elevated for quite some time. It's not only related to corporate earnings and the mega trends that, in our view, need to be confirmed in a kind of show-me environment, right? So every earnings season, we will have probably the same thing that the companies, the most relevant ones, need to confirm what the market is expecting. So far, it looks good that this can be achieved, but this is also leading to volatility, not only on the single stock level, but also on the index level. And then we have politics, of course, so the US elections coming up. So it's we think that the current very, very low levels of volatility might actually need to be a touch higher, right? And is the market positioned for that? I mean, normally, the market is positioning for that, so there are tools to do that, but it really depends on the news flow. So the more negative it gets, so we will get more volatility and then also more negative trading days in frequency.
And Dirk, we talk about the data out this week. You've also mentioned the U.S. election. Something else that we're watching this week is the elections that are going on in Germany that begin at the statewide level. Do the politics in Germany come into your thinking at all when you think about the future of the German economy?
Definitely, because maybe not so much the regional elections we're dealing with now. It's also important, but the bigger one will, of course, then be in the fall next year. And then Germany, I think, will have to make up its mind about how to position fiscally, because if you look at the global fiscal picture, I mean, everybody is going one direction and Germany is going in the other. So maybe there's also room for some fiscal activity coming out of Germany. And that's very much relates then to the elections next year.
Dirk, great to catch up. Thanks for the time this Monday morning. Really appreciate it. Setting us up for the week ahead. Dirk Stefan, CIO for EMEA and Global Chief Investment Strategist at Deutsche Private Bank. Thank you very much indeed. Let's take a look at the core six. Remember, the UK market is out today. What you've got is ASML looking like the only main loser. Looks like technology is where the pressure is being felt this Monday morning. Now down by 0.7%. I can't find a significant reason for this other than the fact that technology is under a little bit of pressure, a little bit of rotation in the market this morning. Does look as if luxury is having a slightly better day today, but it's a quiet Monday morning, I would argue, Chrissy.
Quiet Monday morning, and here at least, I feel like there's some excitement happening in Italy, and we should all take a little bit of a road trip there. Two stocks I've got my eye on when it comes to some of the news that's been making the rounds in the papers, and that's talking about a potential purchase of Vivendi's stake in Telecom Italia. You're actually seeing both stocks up at the moment, and this would really be it looks like a little bit of a rotation in terms of just how much the government has a stake in Telecom Italia, in addition to some of the other players as well. So right now, well received by the market. Telecom Italia shares higher by 1.8%, Vivendi higher by 0.6% as well. So green on the screen in Italy.
Yeah, and green on the screen in Denmark as well. We see Zealand Pharma up about 1 and some percentage point this morning. And of course, this is a company that we probably didn't talk a huge amount about until a couple months ago in their role in the Mpox vaccination. And that, of course, has sent the shares rallying substantially this year. They're up about 130%, catching a bit more of a bid again this morning. But again, pretty small, just given the sort of trajectory we've seen for this stock over the last year, which, as I've mentioned, has more than doubled since January.
Critty wants to go to Italy. I'm going to take you to France.
Okay.
I think you're okay with that.
Yeah.
Okay, let's take a quick look at what's happening at the CAC this morning. There's a reasonable amount of strength. Volumes are low, but there's a reasonable amount of strength out of the French market this morning. Some of the drug stocks are ticking a little higher this morning. Luxury looks like it's having a slightly better day as well. Hard to draw significant conclusions from this in terms of the rotation we're seeing. Feels like, again, a week that's going to get off out of the blocks fairly slowly and then pick up the pace as we work our way into Wednesday and then into some of the data later on this week. We're going to talk about some of the other stories next that are moving around the world this morning. And again, maybe a centre on France. Telegram questioning the detention of its CEO, Pavel Durov, in France. We're going to have the latest on that story. We'll figure out what is happening here and what the implications are. We'll do that next. This is Bloomberg.
This is Bloomberg News Now. News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Monday the 26th, good morning. Exciting morning in Europe. There's a lot going on out there. I joke, it's a quiet session. London's out. You're seeing light volumes elsewhere. There's plenty of other stories that we need to be focusing on other than what's happening in markets. Let's talk about what is happening in social media. Telegram questioning the grounds for France's detention of its CEO, Pavel Durov. The messaging app's billionaire co-founder taken into custody at Le Bourget over the weekend. Let's talk about why and how long potentially he could be held for. We go to Paris now. Our bureau chief, Alan Katz, is standing by. Alan, why was he arrested? Walk us through the details of why the French authorities have made this move.
So they haven't said anything officially yet, but on background, what authorities have alleged is that he is involved in all sorts of things, from cyberbullying to drug trafficking to potentially even worse matters. But the point is not that he did them himself, but that it's essentially a lack of content moderation on Telegram that allows these things to happen. And so your second sort of part of your question about how long he'll be held, part of that depends on sort of what the charges really are. Now, the prosecutors are supposed to come out with a statement today about what they're really actually going to charge him with if they charge him. But normally a detention in France can be 24 hours from the initial arrest, then it can be extended for another 24 hours, and then at that point, which would be roughly 8 p.m. tonight Paris time, he would have to either be charged or released. That said, if they do end up charging him with a very serious crime, saying that essentially he personally is responsible for drug trafficking, because of his things happening on Telegram, then that could actually be extended even further. Though, again, I mean, who knows? But it strikes me as hard to sort of make that claim that he personally is responsible for it.
And how significant is it that he was actually picked up and detained in France, and that is France that's bringing it to him? And what comes next for him?
So it's quite unusual. There have been some countries that have started to make moves to try to put pressure on social media companies to do more in terms of content moderation and to rein things in. It was still, nevertheless, quite surprising that he was arrested over the weekend in France as soon as his plane landed at Le Bourget, as you mentioned earlier. And the question in terms of what's next really depends on whether France charges him and whether or not, having charged him, they decide that he's a flight risk and therefore keep him in jail. Again, like in many countries, the wealthier you are, the more access you have to means to leave the country, for example, a private plane, then you have this mix where you have capable attorneys who can argue that you should be released because you're not a danger to society. On the other hand, prosecutors who say you are a flight risk and therefore we should keep you in jail. We need to, in addition to taking your passport, we need to actually keep you behind bars. So it's not clear yet whether or not he would stay in jail, even if charged, whether or not he might be released but have to turn in his passport if charged. We will possibly likely see by tonight, though, again, as I mentioned earlier, it's possible that it could be extended even more.
So, Alan, this is a very specific issue when it comes to Telegram and, of course, to its founder. But what are they doing in terms of kind of the broader relationship between France and Russia, given that he actually left Russia, fled Russia, now currently lives in Dubai because he was concerned about some of the pushback on a previous social media platform that he had made in Russia. And now it looks like you are still seeing the diplomatic authorities out of Russia almost be very tough on, I'm trying to figure out the wording here, very tough on France right now in response. What's at stake from a country, from a diplomacy point of view?
So that was a pretty surprising response, actually, from the Russian embassy, essentially sort of saying like, oh, he's a Russian citizen, therefore it's up to us to defend him. We don't know the status of his Russian citizenship. There's no indication that he ever renounced it. He does also have French citizenship, actually, which he got in 2021. And so, but it's true, as you say, like he left Russia because he felt under duress there. And so it seems very surprising that the Russian embassy or that the Russian government would suddenly say like, oh, he's our citizen and we need to protect him. Now, that said, Russia and France aren't friends. Macron and Putin, the very beginning of the Ukraine war, Macron tried to sort of straddle this line, saying we shouldn't embarrass Putin, but he's since become quite a hawk and quite an anti-Putin personality on the global stage. And so I think this is more Russia's effort to find something to yell at France about rather than any sort of legitimate concern about the Telegram CEO.
We are going to keep an eye on that. Bloomberg's Paris Bureau Chief, Alan Katz, we thank you so much for bringing us the latest on this story. Folks, I thought this was fascinating because I actually got to look up kind of the size and scope of what Telegram actually is, not being a user myself. 900 million users around the world, but to qualify for the EU scrutiny, 45 million active users in the EU is what you need. So this is fascinating in terms of, again, the global scale of this company.
It's really fascinating on a number of different levels. I mean, I look on the phone today, the Telegram app is still functioning. They have detained the CEO. There's also a question about what kind of precedent does this set? You can detain a CEO after this stuff happens on the platform. Is it so different from WhatsApp, from Signal?
I was about to say, if you're the CEO of one of these other social media messaging apps, are you worried at this point?
Yeah.
Is this different because of the way that it is used, because of maybe less content moderation? Is this a signal to others maybe to up that content moderation? Are they sending a message with this, ironically?
I mean, this is what Elon Musk's concern is, right? So we're going to keep you apprised of that story. Coming up on the program, we're getting an update on the situation in the Middle East. For Israel takes aim at southern Lebanon. We'll dive into the details next. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been Gulf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is the opening trade. We're about 30 minutes into today's session. You are seeing a little bit of red on the screen, but again, very light volume, very light liquidity. We'll, of course, see how the rest of the week shakes out. This might simply just be taking a little bit of cash off the table. However, you are seeing outperformance in France. You're also seeing, I'm not going to call it outperformance, Zurich, the Swiss index, it is flat right now. But you are seeing outperformance in France. Some of their biggest movers are those heavyweights out of there. So that's your markets update. Let's go back to one of the top stories that we're keeping an eye on. A relative calm is holding in the Middle East after Israel's Sunday bombing raids on southern Lebanon. Israel says it took out thousands of Hezbollah missile launchers based on intelligence that the Lebanon-based militant group planned imminent attacks.
We follow Hezbollah for weeks with technological means and air patrols by Air Force planes. At the moment, we detected an intention on the part of Hezbollah to carry out the attack, and we eliminated most of them.
If the result is not sufficient in our opinion, we will reserve the right to respond at another time. Let the people relax. Whoever wants to go back home can go back home. The country must calm down again.
Let's get more on the story. Bloomberg's Jumana Bersetchi covering this for us out of Dubai. Jumana, give us the latest in terms of where the flare-up leaves us in terms of some of these tensions and possible full-on war.
Well, Kriti, we're more than 24 hours since those strikes and counter-strikes took place, and many analysts are calling this an escalatory de-escalation in the sense that it's been more than a month now that the region has been on tenterhooks anticipating some form of a retaliation or a response out of Hezbollah and its proxies in the region, even from Iran themselves, in retaliation to the killing of its senior commander, Fa'ad Shukr, at the end of July. And indeed, over the course of the last couple of weeks, Hezbollah had hinted that this retaliation was forthcoming. Well, it did happen early in the morning on Sunday. And in the end, Hezbollah acted alone. They fired more than 300 rockets towards northern Israel, some even directed towards central Israel, causing very limited military infrastructure losses. There was indeed the loss of one Navy soldier's life. But crucially here is that Israel also engaged in a preemptive strike on Hezbollah's assets about half an hour before the attack took place, taking down what they say is the equivalent of thousands of rockets that Hezbollah would have launched towards Israel, foiling the possibility of a bigger attack. And so this counterstrike has taken place. And what's key here is both sides are saying that this was a victory. Israel is saying that they helped thwart a bigger attack. And then you heard from the Secretary General of Hezbollah, Hassan Nasrallah, towards the evening yesterday. He was saying that this first phase of response was a success. And for the time being, they're going to reassess whether a second phase is needed, hence indicating that the first phase of retaliation is indeed over for now. And what I would just point out is even though Israel declared a state of emergency early on Sunday morning, the Tel Aviv Stock Exchange actually closed up on the day, which signals that many in the region do think that the worst is over or has been avoided for now.
Yeah, Jumana, what's very interesting is it seems very difficult to distinguish between whether we are closer to war or closer to a ceasefire. We have this conversation kind of in either direction. Last week it was looking like a ceasefire. Those discussions are underway. How did the events of this weekend impact those talks?
Yeah, you know, one thing that I thought was really interesting is several hours after the attack took place, an Israeli delegation actually headed to Cairo to continue those discussions with the CIA director, with the head of Egypt's intelligence, as well, with the view of continuing along with the negotiations of that ceasefire deal. And we know that the U.S. have been pushing very actively all throughout the course of last week. You even heard Kamala Harris talk about it at the DNC. It is a focus of the Biden administration now to get this ceasefire deal across the line. Very significant that Israel did decide to still attend those discussions in Cairo on Sunday. That being said, it still feels as though there's a lot of daylight. And even Hamas themselves were not officially represented in the talks. There was a delegation there, and they were briefed on the discussions that took place between Qatar, Egypt, and Israel, and the U.S., of course, but they weren't there representing themselves at the table. One of the key sticking points that has emerged in the last week is that Israel wants to continue to have a presence along this so-called Philadelphia corridor, that is the border separating Egypt from Gaza. For Egypt, for Hamas, that's a non-starter. And so the question is how much wiggle room the two sides really have here to come to an acceptable compromise that would lead to a truce, that would lead to some sort of ceasefire, and very importantly for Netanyahu and his base back home to secure the release of hostages. So negotiations are still underway, but no major signal as of yet that a breakthrough is imminent.
Jumana, how does this impact what Iran does next?
That is the question. And remember, the twin assassinations happened on the same evening. You had the assassination of the senior commander in Lebanon, the Hezbollah senior commander Fa'ad Shukr, and a couple of hours later, you had the targeted killing of Ismail Haniyeh, the then political leader of Hamas, who was in Tehran for the inauguration of Pezeshkian. That all happened in the same evening. And ever since then, both Iran and Hezbollah have been putting out comments after comments saying that they will retaliate and will not let these killings go unnoticed or not accounted for. And what is interesting is they've had a month to get their act together, and in the end, Hezbollah decided to act independently. We have not had an official response from Iran. And indeed, yesterday was the 40-day commemoration of Ashura. There were commemorations going on in the street, but not a lot of talk about the attack that took place between Hezbollah and Israel over the weekend. And so the feeling over here in the region is that Iran at this point is not looking for further escalation. They will have to do something to save face, to show that they've retaliated somehow for the embarrassing killing of Ismail Haniyeh on their own land. But at the same time, they're not in a position right now to push this into an all-out war. And certainly, you could say that the deterrence and the fact that there is such a strong U.S. military presence right now in the region could be one catalyst for Iran not wanting to prod this any further. Furthermore, they're also waiting for the results of these ceasefire discussions, because if that truce does come into action, then it would signal that a whole lot of the temperature and pressure in the region can come down for a couple of months and allow things to get reassessed.
Jumana, thanks for the update. Always appreciate it. Thanks very much indeed for joining us. Jumana Basedji out of Dubai for us on what is happening in the Middle East. Let's talk about the market impact of all of this and what it's doing in particular to the oil and gas markets. Let's bring in Bloomberg's senior energy reporter, Stephen Stapczynski. I always get this wrong.
You got it.
No, I didn't. I didn't get it. I didn't get it.
Eventually
anyway,
you did.
I got there eventually. Stephen, I apologize. I always get it wrong. I don't know why. we're going to fix it one day. Anyway, let's talk about the oil market impact here and talk about what is happening with the read across, because I'm struggling to see one. It seems as if the market has decided that we are at some point going to see something that is going to be market moving, but it just isn't yet. I see a little tick higher in the oil price. Why is the market feeling so comfortable with what is happening in the Middle East right now?
You know, they've come and seen this several times before. You know, since the conflict between Israel and Hamas escalated more than a half year ago, you know, there's been this session where there's been an attack, there's been conflict. It brought in Iran. It was unprecedented, certain things. And oil prices would rise, but they would fall again because oil output, the fundamentals, oil output trade is not affected. The fear, of course, and the reason why oil prices react to this is that you could bring in a wider, broader conflict in the Middle East, which is a major supplier of crude oil. Any more sanctions against Iran would potentially curb exports from that country, a major exporter, despite the curbs and restrictions already on the country. So that's the fear, but none of that has really panned out. And as we've just heard, you know, the situation does seem a bit calmer at the moment. So yeah, oil's up a tick, less than 1%. But at the same time, there isn't this immediate fear that this is going to spiral out of control, which is why you're not seeing an enormous reaction for Brent. And we're still in the around $80, which is, you know, not terribly high considering where we were, you know, a year ago around this time.
Yeah, and $80 is perhaps a number that a number of people are not too happy with, namely OPEC, which seems sort of quiet during this sort of debate about what's going on. They've got their internal sort of fracturing that's going on in terms of the different delegates wanting different things. Where does OPEC play in here? And are they going to be a sort of serious driver for the oil price in the coming months?
I think that OPEC Plus is what the market is watching very closely. Now, from the fourth quarter, they're supposed to add barrels back to the market. This was part of a plan that was announced months ago because the market didn't look necessarily as much oversupplied as it does right now. But now their analysts are saying that if OPEC Plus does carry through with their plan to boost production about 500,000 barrels per day later this year, that would be actually a bearish surprise. Now, just to repeat, analysts are saying that what OPEC says they're going to do, if they follow through with their plan, that would add a bearish element to the market because that would just add more to the oversupply. It would add more water to the fire that doesn't exist. Now, that means that perhaps you'll see OPEC Plus scale that back. Saudi Arabia has, you know, there has long been said that they need a higher oil price to balance their budget. Now, officially, they don't necessarily go by that line, but of course, Brent above $80 is much better than Brent in $70 or even below $70. So there is an expectation that perhaps OPEC Plus will not carry through with the plan later this year to increase output.
So, Stephen, it feels like, I mean, you talked a little bit about the Iranian supply situation, the OPEC situation as well. I'm curious about the ongoing situation in the Red Sea, specifically when we have an oil tanker that's still on fire there at the moment, people comparing it to the Exxon Valdez crisis as well. But it's not something that the market is responding to with as much sensitivity as maybe it did when these Red Sea attacks first began. And I'm curious why, given that they're still ongoing.
I mean, I think there are a few reasons for that. I think, one, it's actually largely priced in, right? The oil market, and a number of markets beyond just oil, natural gas as well, has sort of shifted global trade around, you know, the Cape of Good Hope, maybe going through different channels to get their shipments delivered. We're even seeing maybe more oil shipments going through the Northern Sea route from Russia. Now, all of that together shows that the market has sort of been able to take in and digest the disruption in the Suez and the Red Sea. Now, so I think to a degree you are seeing a reaction, but you're not seeing, and I think oil traders largely see the Suez and Red Sea off the table as a transit route for the foreseeable future. You know, when I talk to shipping executives, they aren't expecting this to get resolved anytime soon. So that kind of plays into the priced-in scenario. So when you do see, you know, an attack like we did before, yes, you would have seen spikes in oil prices, but now I think the market has adapted and sort of digested that. If you go through there, it's going to be dangerous. That is something that could happen, but it doesn't change the risk profile or what insurers are saying. People who want to stay out of that region are going to stay out, for sure.
Yeah, and it's something that you've certainly seen, to your point, to the shippers, but also simply the fact that the U.S. military has, of course, significantly reduced their presence, whereas initially they came to the rescue there. Bloomberg senior energy reporter will leave the conversation there. Stephen Sepchinsky joining us this morning. We thank you so much. Coming up, we go to another top story that we're monitoring across the English channel. France's Emmanuel Macron set to meet his political rivals as he tries to form a government after the grace period of the Olympics. We're going to dive into the details. Stick with us. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Could face bigger challenges next.
It was going to keep bringing the World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Happy Monday. Welcome to the program. Volumes are a little light this morning. Equity markets aren't really doing very much. I think we're going to have to wait until London returns tomorrow before we see equity volumes returning. We're going to build up this week through NVIDIA into the end of the week in the data. I think that probably is going to be the trajectory we're on. Elsewhere, there are actually some pretty interesting things happening. French politics is one area I think we should probably focus on this morning.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Macron has already promised he will not name a prime minister from either the far right or the far left. That's where it gets very tricky because, as you know, the new Popular Front, this alliance of left-wing, actually got the biggest bloc in parliament with 180 seats. They did these meetings as well with Emmanuel Macron on Friday, and their chosen candidate for Prime Minister, Lucie Castet, 37-year-old economic advisor to the Paris mayor, has been everywhere in the French media over the summer, even though she doesn't really have the legitimacy, given she's not an MP, but she's backed by all the parties, including the far left. Now, that's where it gets even trickier, because Emmanuel Macron has said, I don't want to name anyone where you can have the risk of having a far left minister within the government, because they're going to face a vote of no confidence. But on Saturday, Jean-Luc Mélenchon, the far left leader, said he would actually support Lucie Castet as prime minister, even if there is no far left minister in the government. So basically, Emmanuel Macron is caught in his own trap because he didn't put the program of the NFP at the center of the debate, but rather the presence of some far left ministers. So technically, he doesn't have much choice at the moment if he wants to respect the will of the vote of the French last month.
Well, Caroline, walk us through the timeline here then, because it feels like, of course, we had this grace period with the Olympics, this idea that we need to kind of focus on that first. Now, what are the deadlines? Is there even one, or is there a ticking clock in terms of making this decision?
Yes, Emmanuel Macron had talked about an Olympic truce, but the Olympics finished a couple of weeks ago. The Paralympics start on Wednesday night, so he's got a very small window of a couple of days to potentially name a new prime minister, because on Thursday morning he's actually traveling to Serbia for an official trip. So either he names a new prime minister over the next couple of days, or perhaps he waits until after the Paralympics on September 8th. But a lot of the political leaders are pressing him to act quickly and to deliver a new prime minister quickly, because there is one deadline, which is October 1st, where France has to present a new budget. So technically, they need a few weeks in order to prepare that new budget, especially when you are in a situation when France has been placed under an excessive deficit procedure by the EU Commission and needs to give some answers on the budget to the EU Commission by the end of the month. Of course, the last thing that Emmanuel Macron wants is to name someone who then immediately faces a vote of no confidence and then create potentially even more political chaos.
All right, Bloomberg's Caroline Conan there walking us through the French dynamics that we are seeing. And of course, the timeline of when we can expect the decision from Emmanuel Macron. We thank you so much. Let's go to the other part of the world that we have our eye on. Of course, all focused on Germany, specifically because at 9 o'clock, in about 9 minutes' time, we get some IFO data as well. Oliver Crook standing by with a little bit of what we need to be watching in terms of the background of some of that economic data. Ollie.
Yeah, Kriti, it feels like a waste to not use this magnificent screen you guys have here on the London set to talk a little bit about the German August angst, which is all the data that we got out in the month of August that we care about. Industrial production, this is backward facing. This was June, but this was down 4%, right? That is a substantial sort of tick down in industrial production, which of course is very significant for the German economy, which has that huge industrial base. ZEW, the current assessment, that was at minus 77. That is basically at pandemic levels in terms of economic optimism, which is obviously very, very poor. And you kind of hope that you've gotten away from that as the time has gone on. But again, it is not. In manufacturing PMI, again, a miss coming in at 42. Again, this was supposed to come in at 43, so missed estimates. And this is a very large contraction down at 42. And it's 26 months of contraction. In terms of looking ahead, as you mentioned, we have IFO data coming a little bit later in about 8 minutes' time. So we'll be watching that closely. That is expected to tick down. GDP, you get a final reading. That was a quarter of contraction. Could it be worse? Could it be better? And then, of course, we have to pay attention to the inflation reading out of Germany. That is expected to come down to 2.2%. That is within sort of the ECB's range of inflation target. So that is sort of significant. What is perhaps more significant is what happens between these 2 days here, which is Nagel speaks for the first time, and we hear from Schnabel on Friday morning, plus German unemployment up at 6%. That is the highest level we've gotten, again, since the pandemic. So all of these things to watch in the German economy.
Does Germany need rate cuts, I guess is the question.
Yeah.
And it's interesting that Ollie highlights who we're going to be hearing from in terms of the ECB. In some ways, Germany has the greatest angst when it comes to inflation, and therefore the hawks tend to come from this region.
Yeah.
But it feels like this is an economy that needs the rate cuts the most. So there's an interesting kind of push-pull here in terms of what is happening with the German economy. And how is the price of money a problem for Germany at the moment? Or is it other factors like the cost of energy, which central bankers are going to struggle to manage? Is it what is happening in China, which central bankers are going to struggle to manage? How much of this is within the control of the central bank?
Yeah, when you look at the macro and the kind of things that could derail these sorts of things, and we talk about the Chinese tariffs on EVs and the price war. I mean, now it's on cheese. Who knows what's coming next, right? But seriously, it's the German economy that is the most exposed to these sort of things, and it's obviously, one, inflationary, and two, not good for growth.
Well, that's the manufacturing piece of the equation, to your point, the export piece. But I'm curious as well, and I know this is a smaller part of the German economy, but how this affects German consumers specifically. If we're talking about that Germany needs these rate cuts the most, we're just coming off of a conference where we're talking about the transmission mechanism here. How does that show up to German residents, German citizens? That's
don't look at me, look at him.
No, but actually, no.
Historically
it's
overbanked,
not only is it a valid question, you get private consumption data out tomorrow, Critty, so we can talk about that when it crosses across the terminal tomorrow morning. So you'll get actually a gauge in that. But there's also a cultural dimension to this, which there always is with the Germans and a lot of these economies. They're very risk averse. They really are. And when things are just not feeling great, people are not spending money.
They save. But they also, I was reading some reports on consumer confidence in Germany. It's not actually that bad, which I find peculiar given what is happening with the economy. We all talk about Germany being the sick man of Europe again.
Yeah.
But if you look at the confidence data, it's not there.
But isn't that a function, though, of the banking system in Germany, that you have super low rates in Germany in just over competition, everyone kind of vying for the same customer, more so than any other European economy?
Yeah, you've always had the sort of the Sparkassen and the kind of the funding of the Mittelstand, and there's always been that kind of symbiotic relationship. That doesn't feel as strong as it once was, but nevertheless, does Germany have a cost of money problem? It doesn't feel like it. And so. If you do see the ECB cutting, how quickly are you going to see that effect coming through?
Yeah, and you talk to the sort of banks like Deutsche Bank, who obviously we grill every quarter to get an idea, because they're the ones that are lending directly to a lot of these Mittelstand companies, to a lot of these consumer companies, and things they say are beginning to pick up a little bit. But again, they're very non-committal about kind of how big that's moving, and I don't think that it's going to be sort of decisive over the next coming months. But let's see, with these rates coming down, maybe it does make a difference.
That data is going to drop very, very shortly. I have the pleasure of doing the Pulse today, so I am going to be speaking to the president of the IFO Institute. Clement Fust is going to be joining us shortly. The reading drops. We'll get the interview. I think we're going to get to him about sort of 2 or 3 minutes past the hour. So we'll get an update on exactly what is happening here and maybe try and answer some of the questions that we're posing.
I think the last time this data set dropped out, I think I was the one who interviewed him. And I thought what was actually interesting is he had made the point that geopolitics actually plays a factor in this data set. It was something I hadn't actually heard from an economic standpoint yet. We talk a lot about in terms of the narrative, in terms of the politics, et cetera. But I'm curious how much of that plays a role this time around.
It's going to be fascinating to hear. Also, you've got this rearmament story, which I think is going to be an interesting kind of factor in what we're seeing in terms of German industry. We've got a whole bunch of other interviews coming up as well. We've also got an interview with San Francisco Fed President Mary Daly. That's at 7 p.m. UK time tonight. Looking forward to that conversation. What does she make of what happened at Jackson Hole? What was the takeaway from all of that? It's a quiet day from an equity market point of view, but we're about to get some key data. The IFO numbers are about to drop. We'll bring you that next in the Pulse. This is Bloomberg.
world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bullish sentiment sparked by Fed Chair Jay Powell signaling the time has come for monetary easing, tempered this morning by rising tensions in the Middle East. The French President Emmanuel Macron is due to meet the national rallies Jordan Bardella and Marine Le Pen today. This as he figures out how he's going to name a new prime minister. Plus, in just a moment, we're going to speak to the IFO president, Clement Fust, on Germany's business outlook. The country's PMIs missed across the board last week. What is this data going to tell us? It is a quiet morning, a quiet start to the week this Monday. The reason for that, in so many ways, London is out. It is a holiday here in the UK, and as a result of which, you are seeing very light volume across the board today for pretty much every other market here in Europe. At the moment, you are seeing S&P futures absolutely flat. You're not really getting a steer yet in terms of what is happening. In terms of equities broadly across the board, we are absolutely flat. Brent creeping up a little bit. We're up by 1% at the moment. The reason for that, rising tensions in the Middle East being priced in to what we're seeing with the crude price. We are also getting data out of Germany. We're going to break now the IFO numbers. The August IFO Business Confidence Index at 86.6. The estimate there, 86 even, so slightly better at a headline level. But the data recently out of Germany has been fairly shocking. We'll get an update in just a moment. In fact, let's get to that. Let's kick things off.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, welcome. You are watching The Pulse. I'm Guy Johnson in London. Francine Lacqua is off today. It's a Monday morning where we've got a UK holiday, plus also maybe a pause for reflection. We obviously had a great deal to think about come Friday. It was a big moment. We had the Jackson Hole speech from Jay Powell that the market had been keenly anticipating. Let's take a listen to what he had to say.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. Today, the labor market has cooled considerably from its formerly overheated state. The cooling in labor market conditions is unmistakable. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
That was the Fed chair, of course, Jerome Powell, speaking at Jackson Hole, signaling cuts are coming from the Federal Reserve, from the FOMC. What was interesting, actually, was that European policymakers were actually a little bit more cautious, concerned maybe that we are seeing inflation remaining stickier than anticipated, despite actually the underlying economic data pointing to weakness. I point you in the direction of the PMI that we saw last week. Let's add to that now. We've got the EFO confidence data coming out. The headline number, the business confidence index at 86.6. The estimate was 86. These are not good numbers. This is still signaling an economy that is facing tough times right now. In terms of the current assessment, 86.5. Bang in line with estimates. Clement Fust, president of the EFO Institute, joining us now. Nice to speak with you this morning. What does the data tell us about where the German economy is right now?
Good morning. Yes, the German economy has been stuck in stagnation for some time, and this is getting worse. That's what the data is telling. What's been of particular concern is manufacturing, and in manufacturing we have a rather bad reading. This is coming in particular from investment good producers, suggesting that the weakness in investment, in corporate investment we've seen for some time is continuing, and this is now also affecting the service sector as far as it is related to manufacturing, for instance, transport and logistics. So overall, this tells us that the stagnation is continuing, or that the German economy is even getting deeper into stagnation.
Yeah. Clemens, would this be resolved if we were to see interest rates, significant interest rate cuts from the ECB? Are the problems we're seeing in German manufacturing cost of money related?
The interest rates cut, at least the September cut, is already priced in markets, so it's unlikely to make a big difference. I mean, what would make a difference in a bad way would be if this cut didn't come. But it's been priced in, so that alone, I'm afraid, won't help the German economy. I think what we are observing is really structural issues with respect to German manufacturing, the automobile industry, the focus on the combustion engine, the still relatively high energy prices, although they have been declining somewhat, and the fact that German used to be successful in exporting and now much less so. Normally, the German economy is helped by its exports, but this time this doesn't seem to be happening.
Are you surprised, therefore, that the German representatives at the ECB are more cautious when it comes to in cutting interest rates? Is that the wrong call, do you believe?
Well, it is not the job, at least in theory, of the German representatives to be representing German interests, but the interest of the German economy is certainly an interest rate cut, more so than the rest of the Eurozone, because the German economy this time is lagging behind the economy of the Eurozone, but the appropriate stance for the Eurozone as a whole is maybe to be a little bit more cautious. Yes, we are seeing strong wage increases. We are seeing them, by the way, in Germany too. The trouble is that German consumers seem to lack the confidence to spend this money. But I think overall, this stands to be cautious with interest rate cuts, at least with announcing more cuts, is justified.
What does the German economy need right now? How do we revitalize the German economy? You talk about the fact that there are structural problems. What needs to happen at this point from a policy prescription point of view to start to turn things around?
I think we need a boost of confidence of consumers and investors, and that requires a policy shift. We now have the impression that German economic policy is stuck somehow. The German government is divided. They have come up with a plan to revitalize the economy that is going into the right direction, but the steps taken are too small. I think we need much better investment, stronger investment incentives, tax reform. We need reforms to support labor supply, but I would say it's mostly about structural reforms. Of course, falling interest rates, a more expansionary monetary policy stance would also help. It would help in particular construction, I believe. But these are really structural issues. So we need a combination of structural reforms and the loosening of monetary policy.
We're seeing a tick up in energy costs, particularly gas costs recently. If that continues, how big an impact do you think that will make on your data as we go through the winter?
What we are seeing now is that the energy-intensive industries are recovering, albeit from a very low level. Now, if gas costs and energy costs increased again, of course, that would end this recovery. Energy-intensive industries are approximately 15% of the overall manufacturing sector in Germany, so that is not too large, but of course, rising energy prices would add to the troubles. They would also make interest rate cuts more difficult for the ECB, of course, because they would bring up inflation.
Okay, so we need to keep an eye on what's happening with the energy story. It's not a huge effect, but it is an effect. When I think about what is happening with the German economy, my mind instantly turns to what is happening with the Chinese economy. If we were to see how big an impact is what is happening in China having into your data? How clear a connection, how big a correlation are we seeing between one and the other? We're waiting for a turnaround in China. If that doesn't come, do we see a turnaround in the German data regardless?
Well, traditionally, we would have seen a turnaround, but there are two issues. One is the relative overall weakness of German exports to China, and then there's the particular issue of the automotive industry. The Chinese car market used to be a booster, really, for German car companies, but now in China, the share of electric vehicles is increasing very rapidly, and the strength of German manufacturers is more in the combustion engine area, and that is felt now. So a turnaround in China would be welcome, but it may help the German economy less than it used to.
Clemens, how exposed is the German economy right now to a trade war with China or potentially a trade war with the United States? How big a risk is it? What are those you're talking to telling you?
Well, at the moment, there is this risk of an escalation of the trade war due to the tariffs on electric vehicles imported from China. Now, so far, the Chinese response has been very moderated, focusing on dairy products. So I think in the short term, the risk is not too large, but more generally, there is, of course, the risk that due to the geopolitical situation, trade with China will become more difficult. Of course, the US is now the more important trade partner, and under a potential Trump presidency, there would be the risk of trade conflicts. At the same time, Trump is expected to cut taxes and boost domestic demand, and this may, to some extent, offset potential tariffs. So overall, I wouldn't be too worried about a decline in exports after Trump becomes president, if he wins. But of course, he's very hard to predict. So that alone, the uncertainty involved, is would add to the problems of the German export industry.
Clemens, let's wrap this up. What is your message to the ECB? What is this data telling the ECB about what needs to happen next, and how aggressively they need to lower interest rates?
Well, clearly this is supporting the case for cutting interest rates. Of course, the ECB doesn't only make economic monetary policy for Germany, but for the Eurozone as a whole. But clearly, this is an argument to cut rates in September.
And the message to Olaf Scholz?
Well, we need structural reforms. We need reforms to reduce the tax burden on investment, to reduce the regulatory burden on investment in Germany. And we need reforms to boost labor supply because the lack of labor supply is just another impediment to investment in Germany.
Clemens, it's always a pleasure to speak with you. Thank you very much, as ever, for walking us through the data instantly as it drops onto our screens here at Bloomberg. Clemens Fuss, the president of the IFO Institute, one of the German economic institutes. Great to get his take on that data so quickly after we see those numbers dropping. What are we going to talk about next? The Telegram company, the company behind Telegram, questioning the detention of its CEO, Pavel Durov. in France. We'll take you to France next for the latest on this story and get an update on what is happening there. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Minutes past the hour. Welcome back. You are watching The Pulse. I'm Guy Johnson in London, in for Francine Lacroix. The company behind Telegram has questioned the grounds for France's detention of its CEO, Pavel Durov, the messaging app's billionaire co-founder, who was taken into custody at a Paris airport, Le Bourget, over the weekend. Let's get more now. Bloomberg's Gaspar Surbach joins us from Paris. Walk us through what happened. How was he detained? Where was he detained?
Good morning. Yes, it's been quite an action-packed weekend here in Paris. It's been quite sleepy since the Olympics closed, but on Saturday night, around 7 p.m. local time at the Le Bourget airport, Pavel Durov was stepping out of his private jet on arrival to Paris and detained for questioning here. Quite a surprise to everyone, really. The man was detained for an initial 24 hours, and that was then extended. That's what we've started to hear from here, and everyone is very much looking forward to hearing what are the next steps.
So what is the case against him?
What he seems to be accused of is that he is basically not moderating Telegram. He has not taken steps to prevent certain serious crimes from basically being aided and abetted by his platform. That, for the moment, everything is happening behind closed doors. We don't know exactly what the accusations are. We don't even know whether he's actually going to be charged. He may be released at the end. But that's the picture that's emerging for the moment, is that, he should be doing much more to prevent the very serious crimes like, drug trafficking or possibly, apology of terrorism from happening on his platform.
How long can he be held for? What are the next steps here?
So, like I said, 24 hours is the mandatory, detention. That detention has already been extended. He talked to an investigative judge on Sunday evening who extended that period It seems it would be 96 hours for the moment. So, still quite a bit of questioning for him. The strategy of the investigative judge must be to try to soften him. He's probably going to alternate moments where he's going to be faced with the investigative judge for questioning, faced with policemen for questioning, and back in his cell to meditate, I guess. And at the outset of the process, there's basically two options for the investigative judge. He can either press charges, and then we'll know much more what the case against Durov is, or he could decide to give Durov this intermediate status, which is called material witness, and then Durov would be essentially released. He would be allowed to leave the territory, and he would also have access to the document underpinning the investigation, so he'd be better able to understand why he ended up being detained for 24, 48, 72, or 96 hours.
In terms of the sort of surprise factor around all of this, clearly there's some surprise that he's been arrested. What surprised me, though, was that the Russians were pushing back as strongly as they were over the weekend regarding this arrest. My understanding was that he'd already fled Russia, and therefore I find it surprising that the Russians would be trying to take his side. Is this Russia concerned for his legal position, or is this Russia just trying to score points off France?
I might opt for the latter. I think the French criminal authorities in the past have shown they're never shy to go after big international cases. And I think it's only expected to see that the Russians consider this some outreach, some power play. The French obviously will say, no, this has nothing to do with anything political. This is purely judicial. We've seen the French have been quite aggressive in, like I said, in international cases. They've gone after the sons and daughters of African leaders who have bought mansions in France, essentially money laundering cases. They've gone after, in the past, another Russian called Alexander Vinnik, who was accused of cyber extortion. I'm not too surprised of that pushback, to be frank. It's tit for tat.
Guess what? Thanks very much indeed. Guess what, Surbak, joining us on the latest surrounding this case. We'll continue to keep you updated. Staying in France, what we're going to talk about next is the formation of the next government. The President, Emmanuel Macron, meeting again his political rivals today, trying to figure out who could be the next Prime Minister? What does the government look like? We've had a little hiatus for the Olympics. We're now back to business. We'll talk about that next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
So the French President Emmanuel Macron meeting again with political rivals and delegations today in a bid to form a government. That's after snap elections, remember, back in July, left him with a hostile National Assembly that he has no majority in. Let's get the latest from Bloomberg's Caroline Conan in Paris. Caroline, we saw talks on Friday. How much progress was made there? What should we expect today?
Today, Emmanuel Macron is continuing the discussions first with the President of the National Assembly this morning, later this afternoon, the President of the Senate, and in between, the leaders of the far-right National Rally, Marine Le Pen and Jordan Bardella, separate meeting also with Éric Ciotti, remember the President of the Republicans who had split from the Republicans in order to join the far-right. As you know, the far-right came third in those snap elections last month, so clearly the goal of this meetings today is not for Emmanuel Macron to name a far-right prime minister, something he's not going to do, but to actually understand what kind of vote of no confidence someone else could potentially face, because the National Rally actually has got 143 seats in parliament, which is pretty big. Now, on Friday, Macron met with Lucie Castet from the New Popular Front, the left-wing coalition, which came first in those snap elections. She's 37-year-old. She is an economic advisor to the Paris mayor, Anne Hidalgo. She initially said on Friday that she will have to name a few far-left LFI ministers within her government if she was named prime minister. But then on Saturday, Jean-Luc Mélenchon, the far-left leader, actually said this wasn't a prerequisite. Perhaps he would support the Lucie Castet government as long as they implement the program. So perhaps Emmanuel Macron here is going to be caught in his own trap.
Feels like this could take a while. Caroline Conan in Paris, thank you very much indeed. Up next, we're going to talk about the oil price, and the geopolitical impacts of the attacks we saw over the weekend in Lebanon. That's next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
We're approaching 5:30. Good morning. Welcome. You are watching The Pulse. I'm Guy Johnson in London, in for Francine Lacroix. Let me update you on our top stories. Bullish sentiment sparked by Fed Chair Jay Powell signaling the time has come for monetary easing, being tempered a little this morning by rising tensions in the Middle East. We'll get to that in a moment. The French President, Emmanuel Macron, is due to meet the national rallies, Jordan Bardella and Marine Le Pen, this morning. He tries to figure out how he's going to name a new prime minister. And Germany's IFO survey of business confidence falls less than expected in August. But the IFO Institute president telling Bloomberg that the economic stagnation in that country looks set to worsen. Okay, let's turn to the geopolitics and the economic impact that it's having this morning. A relative calm holding in the Middle East after Israel's Sunday bombing raids in southern Lebanon. Israel says it's hit thousands of Hezbollah missile launchers. Based on intelligence that the Lebanese-based militant group is planning imminent attacks on Israel.
We follow Hezbollah for weeks with technological means and air patrols by Air Force planes. At the moment, we detected an intention on the part of Hezbollah to carry out the attack, and we eliminated most of them.
Both Israel and Hezbollah have announced that for the moment their operations are over despite ongoing low-level fighting.
If the result is not sufficient in our opinion, we will reserve the right to respond at another time. Let the people relax. Whoever wants to go back home can go back home. The country must calm down again.
From Dubai now, let's bring in Bloomberg's anchor, Jemana Basetchi, for an update on what is happening here. How does what happened with these attacks change the nature of our expectations vis-a-vis the Israeli-Hezbollah conflict? We've been waiting to see whether or not it was going to erupt into something more significant. Did the weekend's attacks change the calculation?
I think that is the number one question, Guy. And you heard from the man himself there. That was the Secretary General, Hassan Nasrallah, Secretary General of Hezbollah, speaking after the attacks yesterday, saying people can relax. People can go back home. The first phase of this operation is over. And I think if we had spoken 24 hours ago, the region might have given you a different perspective. But today, the feeling certainly is that once again, we got very close to an even bigger escalation, and yet that didn't pan out. And what we have seen is a series of retaliatory attacks. You saw a strike, counter-strike. Israel obviously intercepted thousands, what they say thousands of rockets that could have been fired onto central Israel because of that preemptive strike that they did on some of Hezbollah's rocket launchers in the early hours of Sunday morning. Hezbollah themselves are saying that the phase one was a victory on their part. They attacked the military infrastructure that they wanted to attack, but crucially, they didn't go out of their way to attack any civilian targets, i.e., it could have been a lot messier, but they decided to keep it calculated and controlled. And what we saw is very limited casualties and infrastructure harm on both sides of the fence. There was one Navy soldier that was pronounced killed in northern Israel. And what is interesting that on the back of this, Hassan Nasrallah did give that speech heralding it as a victory, but also saying that this part of the retaliation phase for the killing of Fuad Shukr is now over. And even Israel, which 24 hours ago declared a 48-hour state of emergency, the Tel Aviv Stock Exchange actually closed up on the day. So once again, we did see an escalation that has resulted in a broader de-escalation for the time being of that northern border between Israel and Lebanon.
Is there an impact? Is there a read across into the Gaza peace talks?
Well, what's interesting is even a couple of hours after those strikes took place, an Israeli delegation did head to Cairo to continue with discussions with the CEI director. He was there, the Egyptian intelligence chief, and of course the Qatari PM. Those are the three main mediators we've seen pushing with those discussions. A Hamas delegation also flew to Cairo as well. It's unclear whether they were actually in the room where the discussions were taking place. But it is notable because the messaging from Israel is that even though these strikes and counter-strikes took place on Sunday morning, it isn't going to impede their ability to continue on with these ceasefire discussions. Now, as you've been talking about over the course of the last week, the U.S. have been pushing very aggressively to get the ceasefire deal across the line. It even came up in the DNC. Kamala Harris was talking about the focus of the Biden administration to get to a ceasefire. But the main sticking point seems to be now the fact that Israel wants to maintain a military presence along this Philadelphia corridor, that is the border separating Gaza from Egypt. That is an element that both Hamas and Egypt are uncomfortable with. And so it is unclear at this point whether they can come to some form of an agreement whereby all sides are happy and at the same time secure the release of hostages that many within the Israeli public have been pushing for since October 7th. So there's a lot of internal domestic pressure building on Netanyahu and indeed international pressure building to get this ceasefire agreed to. At the same time, Hamas, from their perspective, there's been a couple of change of political leaders over the last couple of weeks or so. Unclear at this point what conditions they would need to see in order to feel like their own needs have also been satisfied as well, because what they've been pushing for is not just a truce, but a full cessation of hostilities. So at this point, it doesn't seem like a breakthrough is imminent, but the discussions are still ongoing.
And I guess the last question revolves around Iran. We saw what we saw over this weekend. Iran must be obviously factoring that into its thinking. We've been waiting for this Iranian response, and I'm wondering how it therefore changes the calculation to what Tehran does next.
So if you rewind back to almost a month ago, it was the same evening where the senior commander in Lebanon was killed, Fuad Shukr. A couple of hours later, Ismail Haniyeh also assassinated in Tehran. Remember, he was there for Pezeshkian's inauguration. That was the new Iranian president. So these twin assassinations happened on the same evening. And ever since then, we've been hearing from the likes of the supreme leader, from Pezeshkian himself, from Hezbollah Secretary General, from other proxies in the region saying that they are vowing retaliation and that these killings would not go unnoticed. They would have to respond somehow. But what became apparent over the course of this weekend is that Hezbollah went and acted unilaterally. This was not a joint effort. We did not see a three-pronged approach. We didn't see Iran, Hezbollah, and other Houthi militias acting all at the same time. And so that in itself is quite notable because in the end, Hezbollah had to react unilaterally. And it does tell you that even though Iran had been talking about some form of a retaliation, that it will be harsh, at this point, there doesn't appear to be an appetite to escalate this even further. And so there is an expectation that they will respond somehow, but that it will be calculated, especially given what we were just talking about, those ceasefire discussions are still taking place. So if they do get to a ceasefire deal, that again would help bring down some of the temperature in the region. And that is what Iran seems to be banking on at this point.
Joanna, thanks for the update. Always appreciate it. Thank you very much indeed. Bloomberg's Joanna Basechi joining us on the latest in the Middle East. Let's talk about the energy market reaction to all of this. We're joined now by Bloomberg's energy reporter, Kari Lundgren. Kari, I'm not seeing much reaction in the energy market. Walk us through the connection currently between tension in the Middle East and how the oil market deals with it.
Well, I think right now the story of the past few weeks has been that past few months is that there's been a bit of oversupply, and everyone's looking to what OPEC Plus is going to be saying in a few weeks' time. It's interesting. I'm standing here in Stavanger. I have had in the last few minutes the CEO of Equinor pass me. The Crown Prince is here, the Prime Minister. Outside are a bunch of oil protesters. But I mean, in terms of demand for oil and enthusiasm for oil and gas, that seems to be going strong on this end. No concerns.
Okay, so there's still a sort of demand story. I'm starting to see a pickup in nat gas prices, though, for Europe. Talk us through the dynamics around that, because in some ways that's more meaningful for the European economy.
Yeah, definitely. I think we saw a little bit of a drop-off in the natural gas prices at the end of last week as sort of the concerns about what's going on in the Ukraine have eased a little bit. There's a feeling that the maintenance that's going on in Norway will go to plan. And so the supply there seems to be relatively stable, and that seems to be giving traders a little bit of comfort.
In terms of what we're seeing, as you say, it sounds like you're right in the thick of it in terms of what is happening with Norway. We are seeing some outages, though. The market, isn't this something that the market has to regularly deal with? Why is the market so nervous about these maintenance outages?
Yeah, I think it's a good question. I feel like I encounter it a lot here. I speak to the CEOs and executives that are sort of dealing with this, and they're sort of saying, well, this is business as usual. We've been planning this for years. But I just think Norway's in the spotlight as never before. I mean, you have a quarter of gas supplies coming from Norway now. And so when you start having maintenance on the shelf, then suddenly people pay attention to it in a way that they never did before. And you have enormous facility here, Kårstø, that's coming off for almost a month. You have the Troll natural gas field, which is a huge supplier of gas to Europe. And so like earlier this spring, we saw there was an oil platform or a platform that had a small pipe that had a problem. And it was a small pipe, but the whole market is when a pipe and a problem with the pipe comes up, they're thinking Nord Stream, they're thinking terrorism, they're thinking all of these things. And so over time, that information came into the market. It was a small pipe. They were able to repair it. But then even then you see, you have the North Sea, and that's always challenging. But back to you.
Okay, Kari, great stuff. Really appreciate it. Kari Lundgren joining us on the energy story here in Europe. We are obviously watching carefully what is happening in the Middle East, but it does seem as if it's a supply story that maybe is having a bigger effect right now. Coming up, we'll talk about this from a different angle. Tension in the Middle East. Maybe slightly sort of overshadowing a little bit the positivity we got from the rate cut story coming out of Jackson Hole. We've obviously seen significant dollar selling Friday into Monday. We'll talk about whether or not the euro maybe has gone too far. Sonia Martin from DZ Bank is going to be joining us next, DZ Bank. We'll have that conversation about the FX story related to the rate story. We'll do that next. This is Bloomberg.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back. You're watching The Pulse. So a quiet Monday gives us an opportunity to digest what we learned Friday out of Jackson Hole. The headline, certainly a signal from the Fed Chair Jay Powell that rate cuts are coming in the United States. But I would add to that, I would add the caution that we heard from maybe some ECB speakers about how fast the ECB can go when it comes to cutting rates. Now, we've already obviously had one rate cut from the ECB, but there seems to be a sense that maybe the stickiness around the inflation story may mean that the ECB goes a little bit more slowly. And maybe that accounts for the fact that we saw significant dollar selling Friday. Euro dollar, some fairly big moves Friday. We're fading those a little bit this morning. But how much more should we expect in terms of euro dollar, which is now trading at 111.81? Joining us now to discuss, Sonia Martin, Head of FX and Monetary Policy at DZ Bank. Sonia, great to catch up. Did the move Friday against the dollar go too far, or do you think it was on point?
I do think it's gone too far. When you look at what's happening in the US, I mean, people are obviously very concerned about the possibility of the US economy falling into an outright recession. This was triggered, as we know, by the last labor market report. And since then, we have really seen a major shift in sentiment vis-a-vis the US. I mean, you can really tell how data is interpreted in a different way. People are taking a different angle, looking for the spots of weakness rather than focusing on the good bits. So there's been a significant shift in sentiment going along with these very aggressive rate cut expectations for the Fed. I do think at this point the dollar move has gone too far. It's not justified by fundamentals or what the Fed is likely to do. Having said that, I'm also a bit reluctant to say that this has been it, simply because I think we may take some hard evidence that the US is actually not faring that badly. And we may have to wait for the next labor market report, which comes out on the 6th of September, before we get some new information.
I'm starting to read reports of the dollar becoming a funding currency. What do you think of that?
Okay, that would require, I think, considerable more rate cuts from the Fed than what we're anticipating. So I'm not convinced of that argument. And there are still plenty of other currencies around that you can use that have much lower interest rates. But you know what we are seeing, it's interesting that you mentioned this, because we have seen this happen again and again in last year as well. People suddenly sort of very much turn against the dollar. And while I think this time around there's more justification to be a bit more cautious, it tends to happen very quickly and very radically, and people sort of rush off in one direction, and I think it becomes a bit one-sided.
Let's look at it from the other side of the pair. The data out of the Eurozone, I hear the ECB officials talking about their concern around inflation, but I've just had a conversation with the EFO's Clement Fuss, and he's talking about a really dire picture in Germany, and Germany in desperate need of lower interest rates. Is your sense that, again, that we're overdoing this expectation that the ECB is going to hold off because inflation remains a concern? Is that narrative also being overdone?
Yes, I do think that it is overdone. I mean, what we're looking at from the ECB is some very cautious policy easing. We're looking at one rate cut per quarter, so they're not moving very fast, and they have ample time to allow the inflation rate to continue to come down towards their target. I mean, most of the major central banks currently have the problem that their inflation rates are still above target, and they can only cut on the expectation that inflation will continue to come down. So they all have to tread quite carefully, something that we're currently forgetting when we look at the Fed. The ECB is on track to cut, and the latest data, I think, on wages was quite encouraging. So I think the ECB is on track, but you have to be careful not to overstimulate market expectations, because that can basically come back like a boomerang and result in surging inflation expectations, which will make cutting more difficult. So they have to be a bit careful, right?
Do you think there's a danger that Powell's doing that? I remember December last year, Powell set the market up. Everybody got terribly excited. We priced in loads of rate cuts. Those rate cuts didn't materialize. Is this time different?
It is a little bit different. I think back at the turn of the year, it was completely ludicrous. I mean, the market was expecting 160 basis points in rate cuts, and the Fed was supposed to start in March, and there was absolutely no fundamental reason to do that. I think it's different this time around, because this time around we are seeing some weakness in the labor market. We have seen the data in the US deteriorate. We are seeing a slowdown. The inflation rate has come down. So, there is now the evidence that the Fed needs to cut rates. But I think the expectations that we saw quite recently, I think it was up to 125 basis points by the end of this year in 3 meetings. That is definitely overdone, yes.
So where do we go from here? What kind of ranges should we be thinking about? Let's talk euro dollar.
Well, I think we're probably going to need some evidence, as I said, to see that the U.S. economy isn't faring that badly. And I think we could, if that happens and when that happens, I think we can see quite a quick turnaround. And then suddenly everyone's going to remember the one crucial factor that they're all ignoring right now, which is that the euro has no business being at 112. Never mind the dollar story. But, as you said, the data in Europe is quite dismal, particularly in Germany. So, we're not supposed to be here. So I think we can see when it happens quite a quick turnaround. We still have a forecast at 108, and we haven't changed it. Obviously, I'm feeling a bit more nervous today than I did a few weeks ago, but we haven't changed it. And I still think we have the potential to pull back until then. And then, at some point, inevitably, someone's going to ask me about parity again. So that's going to happen.
But you certainly, the price feels really wrong right now. Let's say it's 108, 109. Let's say it's somewhere around there. The price feels.
Yeah.
So it's just what I'm just wondering. You talk about September the 6th. Is that going to be the first catalyst? If we only get 25, is that the point? If the first Fed meeting only delivers 25, is that the point? When do you think that kind of light bulb moment is going to be, and we start to change the direction?
Well, I mean, I think we've both been in this business for a long time, so we both know that predicting the light bulb moment is very, very tricky, because market sentiment can change unpredictably from one second to the next. I would say that September 6th, so the labor market report, is crucial. If we had a distortion in the last report because of the hurricane, then we should find out about this in the next report, which could then be quite strong. So that's definitely the big moment. And then I think the 25 basis point cut, in September, no huge discussion about 50. I think that's another trigger.
Yeah, you get a strong payroll report. I guess really interesting. Powell set us up for a rate cut. You get a strong payroll report. Life could get quite interesting at that point. Sonia, great to catch up. Thanks for joining us. Really appreciate it. Sonia Martin, Head of FX and Monetary Policy, joining us from DZ Bank. What are we going to talk about next? How a series of failures, missteps and lost opportunities led to the global Mpox emergency. That's today's big take. We'll talk about it next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Mpox, a global health emergency that scientists say could have been avoided. We've missed opportunities, there's been a lack of funding, it's caused the spread of the virus in Central Africa. Joining us now, Bloomberg's healthcare reporter Janice Q in Johannesburg for an update on today's Big Take. How could have this been avoided? Where were the missteps?
Guy, there was a global health emergency declared for Mpox in 2022, and when that ended in May of 2023, Africa still hadn't received any vaccines. And I will just note that that was a milder strain of Mpox, the previous global health emergency, and that's probably the most crucial misstep. It's really just inaction and almost an inertia around emerging diseases in Africa. I think that that's probably the main thing. Surveillance and testing is low. And I think if these had been in place much earlier, we may not have seen this mutate.
Yeah, and the mutation is the critical thing, because the mutation is what we are now worried about. So what's being done, again, kind of where have the missteps around the mutation been in terms of containing it?
The Congo is a particularly difficult area to work in. It's a country roughly the size of Western Europe. It's war-torn. It's got the world's second largest tropical forest. And so that's been part of the problem. It's difficult to get even some of the basics like water for washing hands, and public messaging has not been an easy thing to get out. There's been stigma around this disease. This particular time with the mutated version, we've seen a lot of children infected, and that's often misdiagnosed as chickenpox until parents or caregivers get the children to a facility. And so all of this has delayed, and I think the big messaging here has been if there were vaccines a year ago or earlier, we might not have seen this rapid increase.
Janice, thanks for the update. Thanks for the big take. Really appreciate both. Janice Q joining us from Johannesburg. You can read the big take on the Bloomberg today. Coming up a little bit later on, San Francisco Fed President Mary Daly is going to be joining Bloomberg. That's at 7 p.m. UK time. Up next, Manus Cranny with the brief. Manus, over to you.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of success. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Crenny. You're welcome to Bloomberg Brief. Let's set your agenda. The time has come. The Fed Chair, Jerome Powell, sends a clear sign of policy easing, giving global investors confidence to take on risk. Markets now turn their attention to another piece of the jigsaw puzzle as we count down to the health of the consumer and the PCE data. Over in the Middle East, Israel says it has stopped a planned Hezbollah assault after bombing Lebanon to thwart attacks. Good morning. That's the very personification of the juxtaposition in these markets between the geopolitical risk in the Middle East and a full-scale escalation and the Powell pivot, which is the time has come. That spirit of the time has come invoked a 1% rally in the S&P and in the NASDAQ on Friday. The question now becomes a debate as to whether the rate cut is 25, 50, and whether that becomes necessity or a choice. You can be pretty sure September the 6th is going to be like a sword of Damocles on risk in terms of that jobs number. It will absolutely define whether they need to cut with conviction or whether they can do a slow, mellifluous drift of 25, 25, and 25. NVIDIA is on the stumps this week on the 28th. That will be the vanguard of the AI revolution, as some people have said. Yields dropped on Friday considerably, down by 9 basis points. You've got 4 months of a rally in bonds. Hope there's something working in that 60-40 portfolio of mine. But bonds have rallied for the 4th month in a row. So you are looking at this narrative, whether that's fully priced now for nearly 100 basis points of cuts in September. Torsten Slot warns over at Apollo, the market is way too far ahead of itself. There's no need for 4 rate cuts. It could indeed reignite inflation. And the dollar has quite literally flopped. It is in free fall. You've had a nice momentum in the yen, rallied for 2 days in a row, up by 1.76%. What you have here is, again, the juxtaposition on risk between equities. Likewise, that is part of what is driving the narrative in yen, not just the the rate differential. Let's take a listen to the Chair Powell giving the green light to the beginning of this rate-cutting cycle. What shape and style it is, we will debate. Jackson Hole, Friday.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
His confidence is growing. Is Van Ram's confidence growing? That we're in for 100 basis points of cuts between now and the end of the year. Van, I posed the question at the top. We're caught between the juxtaposition this morning between geopolitics of where you're sitting in the Middle East and the narrative from the Fed. The debate now becomes whether they come out of choice or necessity, and they are two very different cadences.
As of now, morning manners. As of now, they are doing it out of choice. But, you know, as you know, the August payrolls data will be crucial. And if that points to, that will tell us whether or not it will become a necessity. If it becomes a necessity, 100 basis points is eminently possible because, you know, one of the key messages from Fed was he didn't close the door toward a bigger move. He didn't say gradual. He didn't use the word gradual. He didn't say use the word modest. So he's left the door open for bigger rate cuts, and that means that, you know, the labor market is going to be crucial to how far the Fed goes and how fast the Fed goes from here. At the moment, though, it's a bit of choice.
Well, look, I describe the dollar as being in a form of free fall. The debate will be, of course, how hard is the landing in the United States of America, but it is the rate cut trajectory as well. Now, that's giving some succor to the euro, isn't it?
Absolutely, Manus. You know, one of the first articles that I wrote this year was making the case for a weaker dollar. It has been a delayed trade, but it is coming to fruition now. Having said that, you know, the dollar has fallen a whole lot. It's kind of oversold on the charts. So I expect a near-term feeble bounce, not a bounce with any kind of vengeance, not a bounce with conviction, but a feeble bounce. Surely because it's oversold on the charts. But, you know, there is the case that the ECB won't be able to cut rates nearly as fast and as much and as deeply as the Fed. And that will put a wind in the sails of the euro. I mean, the Fed's real policy rate is 270 basis points. That's staggering by any measure. If you look at the ECB's real policy rate, it's just about 90 basis points if you take into account core inflation. So the ECB won't be able to cut rates so much and so deep, and that's what the currency markets are fixated on, which is why the euro is rallying as much as it's done this month.
Then I've held many a call. I've held onto it. I've hugged it like hell. And you know what? Eventually they do come round. If you hug it for long enough, the position comes good. Ben, thank you very much, with a little bit of pain along the way. My guest this morning is Adarsh Sinha, co-head of Asia FX Rate Strategy at B of A Global Research. Good to have you with us this morning. So let's just sort of think about where we are. You say that Asia and the rest of the emerging markets, that's another quote that I'm going to use a little bit later on. Let's just debate the necessity of a 50 basis point cut or the choice to do a larger than 25 basis point cut. Where do you stand? How do you frame this cycle that we're about to go into?
Right. Good morning, Manus. So I'd agree with Ven. Right now, it's a choice rather than a necessity. And if I look at how Asia markets have been trading this morning, I mean, obviously the dollar has collapsed, but there's some signs of exhaustion in the short dollar trade, probably for the reasons Ven mentioned. You know, technically it's a little bit oversold. But I think the market is now waiting to see whether there's a necessity. And as was alluded earlier, it really depends on the labor market. I mean, does the market care about the PC inflation numbers at the end of this week? Probably not. I would argue jobless claims this week is probably more important than the PC number. So the labor market numbers leading up to the payrolls will ultimately determine what Powell suggested. Is it necessary for them to cut faster than 25 basis points meeting?
Yeah, it's interesting that you say jobless claims will take on a bigger protagonist for risk rather than the PCE on Friday. I'm interested in your view that the dollar sell-off is slightly exhausted. Some say it's in free fall, down 2.37% this month. What I want to get a sense from you, and especially because you're sitting in the Asia trade, is to whether there is a shift. And there is this narrative growing that there is a shift in the carry trade away from using yen as the carry vehicle to the dollar as a carry vehicle, and the dollar actually will be used in the form of a renewed carry trade. Is there any veracity to that narrative that's building?
So firstly, no, it's too soon to say that. Funding in US dollars is still very expensive. But what I would say is in the Asia-Pacific region, we have seen a build-up of kind of a cyclical carry trade. So not the spec carry trade that we talk about by speculative investors, CTAs, hedge funds, and so forth. But to give you a couple of examples, corporates have built up FX and US dollar deposits over the past many years. And as the US dollar starts to weaken, they might think of unwinding that. Similarly, institutional investors like life insurance companies and pension funds have kept very low hedge ratios on their US assets, which is kind of like a carry trade, which works fine until the US dollar starts to weaken. So I'm a little bit concerned over the medium term that if some of these longer term carry plays start to unwind, then that could amplify the dollar depreciation trend, despite kind of the near-term exhaustion that I talked about earlier.
And I presume that that could be more amplified within the yen trade, or certainly give it another leg higher.
I would argue the yen is the one exception, actually, because in Japan, you haven't seen as much of a buildup of the structural carry trade. And in Japan, you know, the carry trade played a role and it's unwound, but you have seen non-carry outflows. You've seen corporate FDI outflows from Japan for many years now, and we're seeing Japanese retail outflow that have very little to do with interest rate differentials. It has to do with the diversification of the household balance sheet that's very overweight cash. So the yen move, I think, is more done than the move in other currencies in Asia or the move in the euro, for instance. And if these structural outflows resume and if markets stay stable, then I think the yen should probably lag in any US dollar downtrend that we do see.
Let's just square away the euro. Ven had written a piece at the start of the year and he was hugging it to death, and we all know how that feels. But you would actually probably jump in with that. I mean, you're bearish on the dollar, as you say, but I'm curious as to whether it is the euro that will outperform, because I see that you've gone for a slightly higher level on the euro dollar by the end of this year, but you're way out of consensus with where the euro dollar trade will be next year. So this is quite a significant shift for the euro. Is that based on the differential between what the Fed can cut and the ECB will actually be able to cut?
Yeah. So, Manus, we've reached our year-end forecast of euro-dollar at 112, so we're planning to take the rest of the year off. But more seriously, I think when we think about the preferred dollar short, euro is maybe not the best risk-reward. Yes, the ECB might cut somewhat slower than the Fed, but they're still going to be in an easing cycle. The currencies that we actually like to be short the US dollar are probably the pound and the Australian dollar. I mean, in the UK, Andrew Bailey did signal potentially a faster pace of rate cuts, so maybe a bit less about the rate differential. But if you think about Australia, the one central bank that's probably going to be cutting later than any other G10 central bank is the Reserve Bank of Australia, based on the data and their communication. So I think the pound sterling and the Australian dollar are preferred longs versus the US dollar if the dollar depreciation trend continues.
Where could you see pound and Aussie getting to in the near term? If you've got 117 on the euro dollar, where can cable go to on a tailwind with that?
Right, so our year-end forecast for cable is 135, and beyond that, when we do expect euro to go higher, we could get closer to 140. I think Aussie, the one sort of headwind for the Aussie is China. So China is still very, very weak. China's imports of commodities are still very weak. So Aussie could probably get to 69, which is our year-end forecast. It might struggle to move above 70 unless and until we see some stabilization in Chinese import demand, which doesn't quite seem imminent yet.
Adarsh, thank you so much for being with me. Nice, interesting nuance in terms of the shape and character of the carry trade. Adarsh Sinha of Bank of America Global Research. Thanks for being with me this morning. Setting the agenda. Other stories trending on your Bloomberg terminal this Monday morning. This is what we've got for you. Vice President Kamala Harris's campaign crosses the $500 million milestone. It raised $82 million during last week's convention in Chicago, pushing its total fundraising haul to $540 million since President Biden said he was not returning to re-election. China's budget spending shrinks. Income from land sales also fell at a record pace. Local governments have been cutting spending due to the housing downturn, intensifying calls for Beijing to add more stimulus. And in the Netherlands, the Dutch authorities fined Uber to $324 million for transferring personal data of European taxi drivers to the US. Uber has indicated its intent to object to the fine. So we have this mild risk on. As I say, we have this juxtaposition between geopolitics and the Powell pivot. You can just see here we're giving ever such a slight amount back on Bitcoin this morning. We did flirt with $65,000. We put on 7.5% last week. Ether also lower. Keep an eye on Toncoin, which is the token at the bottom. This is the 10th largest crypto base. Of course, it is backed by CEO Pavel Durov of Telegram, who was placed under arrest in France yesterday. So crypto is an interesting space right at the moment. Coming up, the Middle East remains on edge as Israel bombs Lebanon to stop what it calls a massive planned Hezbollah assault. That is next. And Antimo's Frank Monkum joins me around the desk. His call, 2 cuts for 2024, the context of what happens next from the Fed on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Or other authorities
could face bigger challenges next.
It was going to keep Real World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It is incumbent on all parties in the region to work towards de-escalation and stability. And so we are feverishly working in Cairo as we speak with our team and the teams of the other mediators, as well as with the Israelis, to get to a ceasefire and hostage deal.
That was the U.S. National Security Advisor Jake Sullivan speaking after Israel bombed Lebanon, taking out thousands of Hezbollah missile launchers in what was called a preemptive strike. Giovanna Basecci joins me now from the region. Giovanna, yesterday's flare-up, and that's how it's being contextualized as, where does it leave us in terms of the Israel-Hezbollah tensions? Because both sides were waiting, one for the retaliation, but by lunchtime, the New York Times said, by breakfast time, both sides were employing language of containment. Is that your assessment?
That is most certainly the assessment of the Middle East about 24 hours on from those attacks and counterstrikes, as you just highlighted, Manas. The way I would describe it is a de-escalatory escalation is what we saw, because ever since the killing of that senior Hezbollah commander about a month ago, the whole region has been on tenterhooks waiting to see what the retaliation would look like, especially because Hezbollah, the Secretary General Hassan Nasrallah, has been saying consistently that there will be a retaliation. They will have to seek revenge for the killing of the senior commander. Well, we know that that attack came over the course of the weekend, late on Sunday evening, early Sunday morning, I should say. About 340 Katyusha rockets were fired into northern Israel, some directed towards central Israel. But of course, crucially, we know that Israel themselves engaged in a counterstrike, a preemptive attack on some of those rocket launchers, themselves saying that they intercepted thousands of rockets in what could have been a much worse attack. And so both sides are saying that this is somewhat of a victory. Israel saying that they foiled a much bigger attack that could have taken place. And Hezbollah, later in the afternoon, Hassan Nasrallah gave a speech saying that from his perspective, they did what they had to do. Phase one was a success, and they're going to assess whether more needs to be done, which tells you that for the time being, the tit for tat is over, and the region can once again go towards this relative period of calm in a wait-and-see mode to see whether there will be other retaliations. And particularly on that front, people are watching the reaction out of Iran very closely.
Yeah, I think the juxtaposition, as you described there, between an escalatory, a de-escalatory escalation. If you look at what was said to Lloyd Austin by the Israeli defense minister, discussing the importance of avoiding regional escalation, which then takes us to the framework and the backdrop for for ceasefire negotiations. Where does that stand? Because they did start yesterday, although perhaps one's assessment of that differs depending on the side that you're on.
Well, what was really interesting is that a couple of hours after that attack took place, an Israeli delegation went to Cairo to continue along with those ceasefire discussions, as if to say that their broader signal to the region is that the attack was done over, it was an incident that passed, and that they had to continue on with these ceasefire efforts. And we know, of course, that it has been a major focus of the Biden administration. It came up in the DNC last week. Kamala Harris specifically referenced the need to get a ceasefire deal passed across the line. Secretary of State Blinken, 9 trips to the region so far, met with Netanyahu last week, and there seemed to be some positive signals coming through. But now it has emerged that one of the major sticking points vis-a-vis those ceasefire discussions is what happens to that so-called Philadelphia corridor, that is the border separating Gaza from Egypt. Israel are insisting on maintaining a security presence there. That is a no-go for both Hamas and even Egypt themselves. And so the question here is whether more compromises can be made to ensure that all sides and all parties who are participating in these discussions feel that they're being represented and their needs represented. And ultimately, the goal here, which is what the U.S. administration and the international community have been pressing for, is a cessation of hostilities, but also the exchange of hostages and Palestinian political prisoners. And it still appears as though there's a lot of daylight between all of these sides, despite the U.S.'s best efforts.
Jumana, thank you very much. Jumana Bassaci in Dubai. Coming up, NASA picks SpaceX over Boeing in the efforts to bring astronauts home. And more headlines from around the world, setting the agenda right here on Bloomberg Brief for your trading week. Good morning from New York.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's Bloomberg Brief. I'm Manus Cranny in New York. Front pages. This is what's making the headlines this Monday morning around the world. First up, the Washington Post. Donald Trump suggests he might skip the ABC debate with Kamala Harris scheduled for September the 10th. He made the suggestion on a social media post on Sunday night. Now, this is not the first time that Trump has indicated he would back out of the ABC News debate. Next up, Wall Street Journal reports that IBM is shutting down its China R&D department. It's just the latest move of retreat from the country, I should say, by the top U.S. technology companies. It will affect more than 1,000 employees. And Bloomberg leads with another setback for Boeing. At NASA, it's turning, it's turning to SpaceX to bring home the astronauts who are forced to extend their stay at the International Space Station due to technical issues with their Boeing aircraft. We've had a conversation about currencies in this past 30 minutes. Is the dollar's drop? It is a slightly better bid this morning, but it has lost nearly 2.3% against the yen in this month. Is the dollar's sell-off overdone? It is geopolitics and the response from Hezbollah and Israel that has driven a little bit of a more of a tone to the dollar this morning. Bank of America say the dollar is short-term exhausted. Jobless claims will be more important than the PCE. They've got 112 on the board. They're done for this year. They've hit their target for this year on euro-dollar, 117 for next year, and that the yen carry trade is pretty much undone. Coming up, we'll return to the narrative from Jay Powell.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Manus Craney. Let's set your agenda. The time has come. Fed Chair Powell's clear signal of policy easing gives global investors the confidence to take on risk. Markets now look ahead to another piece of the jigsaw puzzle. We count down to a rate cut, the health of the consumer, and the PCE data. Over in the Middle East, Israel says it has stopped a planned Hezbollah assault by bombing Lebanon over the weekend. Good morning. We're juxtaposed between the Powell pivot to rate cuts are coming to the geopolitical tensions in the Middle East and perhaps an expansion of the proxy wars. We'll discuss that in just a moment with Bobby Ghosh. SPOOs at the moment are up 0.1%. Again, the sword of Damocles will be September the 6th in terms of the jobs numbers, and that will really raise the temperature on the debate between a 50 basis point cut and a 25 basis point cut. But be sure of this, if you get a low-grade jobs number, you're going to get cuts with conviction. And Powell did not use the word gradual, which leaves him a great deal of optionality. NVIDIA will be on the blocks on the 28th, so all eyes are down on that in terms of driving the risk narrative for equities. We put on 1% on Friday. We're now up 1 1/8 from Friday. So equity risk is definitely in the plus zone. The vanguard of AI will be the driver. Bond markets, you lost 9 basis points on Friday at the very short end of the curve. There is a warning from Torsten Slok at Apollo who says the market is so way ahead of itself. There's no need for 4 rate cuts. And if anything, it could reignite inflation. The yen is stronger this morning. The dollar is down. I mean, the dollar, some would say, is in free fall. Bank of America say that the sell-off in the dollar is overdone, but you've had a 2-day rally in the yen of over 1.76%. Helping that along is, of course, the discomfort of the geopolitical situation between Israel and Hamas. Let's take a listen to the Fed Chair, Jerome Powell, the Fed President. He weighed in on the rate path at Jackson Hole.
My confidence has grown that inflation is on a sustainable path back to 2%.
Down to 2% or 2% goal.
The cooling in labor market conditions is unmistakable.
It really starts to tell me that things are much more imbalanced than they have been for quite some time.
In the real rate sense, we've been tightening, and when the conditions are not overheating, you got to be really careful with that kind of passive tightening.
I like the word methodical. That's what I'm hearing from my contacts.
The time has come for policy to adjust.
Well, Frank Monkham is my guest this morning, Senior Portfolio Manager at Antimo, weighing in on the risk of a Fed pivot. Writing this, volatility is likely to return post-Labor Day. Base cases for 2 cuts, September, perhaps December, should growth continue to moderate at the current pace. There's no need to move with aggressive jumbo cutting cycle unless the economy warrants it. Frank, good morning to you. We've got a feast this week of confidence, of PCE at the end of the week, but the jobless claims come in the middle. I said the jobs report is going to be like a sword of Damocles for this market. Just contextualize for me how important September the 6th will be in reaffirming your 2-cut call.
Yeah, absolutely. Thanks, Matt, for having me today here from Washington, D.C. Obviously, there's the Fed now has a green light to start the cutting cycle, given how, inflation has been dropping sequentially. We've got, 1.6% core CPI now on a 3-month basis. Inflation ex-shelter is right around flat on a 3-month basis as well. So the narrative really is shifted from inflation over the growth side of the mandate. And obviously, we had a little growth scare with the NFP miss, a couple of weeks ago, but for the month of July. So this NFP coming up for the month of August in a couple of weeks is really crucial for the Fed. And I think the bogey for us really is the 75K sort of threshold on NFP. and potentially 4.4 to 4.5% on NFP is on unemployment rate rather is what could potentially tip the Fed over to easing a little bit more swiftness, maybe 50 basis points. But our base case is 25 basis points set, and kind of wait and see whether the July print on NFP was a blip, and kind of adjust course from there.
I like you got your golfing references in there. How disappointed are we going to be, Frank, if this transpires to be 25 basis points and not 50?
So can you repeat that? Sorry, Manos?
Sure. How disappointed do you think these markets are on risk? You look at equities near all-time highs. You look at credit spreads being well behaved.
Yeah.
I look at the dollar flopping. How disappointed will the pro-risk camp be if it's 25, not 50?
Instead of 50 for the month for September?
Yeah.
I think the consensus now is probably around 25, so I don't think markets would be hugely disappointed if we do get 25 instead of 50. But I think the reason, the real thing behind it is why do we get 50, right? If we get 50 because there's a real growth scare, let's say we print something like 50K NFP or perhaps 4.5% unemployment, that could be really spooky for risk assets. So I think markets really have to be careful as to the reason behind whether we get 50 or 25.
I love your skepticism. You've looked at volatility. I know you've looked at multiple volatilities from FX to MOV on the bonds to the VIX. You would say that the recent bounce in equity markets and the sell-off in volatility is actually an opportunity to load up on puts.
Yeah. I mean, we've been looking at volatility for quite a while. I mean, I was on the program in the early part of the summer, kind of beating the drum on, being long volatility. It obviously played out right around the August 5th VIX spike. And we've seen a very, very swift retracement in volatility. Basically, a 10% turnaround in performance on the S&P, which has collapsed volatility kind of overnight from 65, which is kind of a near all-time highs to now 15. We think volatility is back to being on the cheap again here. When you look at volatility really versus kind of the cross-asset volatility complex, so we're talking about volatility across other asset classes such as the bond market with the MOVE index, FX volatility, even the VVIX, which is the volatility of the VIX. The VIX really looks cheap where it is right now, especially given the risk landscape that's still ahead of us with the election cycle and the return of really, frankly, liquidity after Labor Day. One of the things we've been telling our clients over the last couple of weeks is we have to be mindful of the fact that liquidity rather really works both ways, right? I mean, the turnaround that we've seen on the VIX and even on equities is probably attributed to the fact that liquidity rather hasn't really been present in the marketplace. So we have actually a rating on the VIX right now, which is we rating the VIX as in being rated PG-13. And the reason behind that is we ran a study on the VIX over the last 30 years, and we realized that every time the VIX were to pop up above the 13 sort of level, after being below that for a little while, which is the case which has been the case over the last couple of months, we tend to remain in a higher volatility regime where the VIX tend to average about 20 to 25, and I think it's very likely that we see that, especially given how tight the U.S. elections have come to be now. We think that it's going to be a very tight race, and historically, every time we've seen such setups around the election times, the VIX has really been spiking. We saw it 4 years ago when the VIX popped up from 22 to 42 from Labor Day, the election day, and we think there's a significant risk that we see a repeat of that this year.
Well, they've got the beautiful game, and you've got the beautiful hedge. So we'll know what to do to load up on that. Look, I'm curious. I've been sort of pushed back by Bank of America this morning. I was sort of like really excited about the carry trade, pro risk, maybe even using the dollar. And Bank of America were going, no, I don't know what you've had for the weekend, but we're not having any of that trade talk out of you. What I want to get a sense from you is the bond market has really sort of ramped up and got quite ahead of itself, some people have said to me. And it goes back to the second question that I asked you, which is, what is the risk of disappointment if we get 25 basis points rather than 50 basis points in September? You said to me, minus 25 basis points is the built-in consensus, accepted consensus figure. But if we look at the bond market, it looks a little bit stretched. Do you think it's rich?
I do think we're probably a tad rich here at this stage of the of the cycle. I mean, clearly, whenever you start hearing clear signs of the Fed pivoting into the monetary cycle, you're going to get this Pavlovian sort of reaction function of people buying kind of, bonds and treasury bonds hand over fist. So that's normal. But I think what's happening in the bond market, in my view, is this tug of war between the cyclical and the fiscal. On the cyclical side of things, you've got the Fed easing, so obviously you've got to respect that. Whether we get a recession or not, I mean, that's obviously going to be very positive for rates market. But I think once we get a clarity on what the path of that easing cycle is really going to look like, and my hunch is that it's probably going to be a shallow easing cycle because I think the U.S. economy is fine. We've got equities at all-time highs. Financial conditions are easing. So I think we're going to shift away from trading the cyclical to really trading the fiscal. And the fiscal really is a structural issue that's still plaguing, the bond market here with a ton of supply coming online going into next year. You've got, again, we talked about the election cycle. I mean, regardless of really who really gets in the White House, and I'm speaking of that, based out here in D.C., I think it's consensus that no matter who gets in there, we're still going to be...
It's going to be a volatile time.
Facing a
Frank, we got to wrap it up there from DC. As you say, it could be the fulcrum of all the vol going into the back quarter. Choice, not necessity, of rate cuts from the Fed. Antimo's Frank Monken, my guest this morning. Coming up on the show, tensions remain high in the Middle East as Israeli warplanes bomb Lebanon over the weekend. We discuss right here. Context Matters on Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday, only on Bloomberg.
The top names in global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the U.S. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It is incumbent on all parties in the region to work towards de-escalation and stability. And so we are feverishly working in Cairo as we speak with our team and the teams of the other mediators, as well as with the Israelis, to get to a ceasefire and hostage deal.
That was the U.S. National Security Advisor Jake Sullivan. The Middle East remains on edge after Israel bombed Lebanon over the weekend, taking out thousands of Hezbollah missile launchers in what was called a preemptive strike. Bobby Ghosh joins me around the desk this morning. So this is the long-awaited response, Bobby, from one of the proxies of Iran, from Hezbollah, into Israel. Israel preemptive strike on Hezbollah. But they were very quick to sort of call a de-escalation from this. Do you think that that's the correct way to view the current conflict?
Well, the language coming out of Hezbollah suggests that this was their part. They've done their part. They claim they fired off 320 rockets. They fired at 10 different military bases within Israel. They've given Israel a shellacking. And if you listen to Nasser Nasrallah, the Hezbollah leader's language yesterday, there's a suggestion that, okay, we've given the Israelis what for. The expectation since the assassinations of Fuad Shukr in Beirut and Ismail Haniyeh in Tehran has been that there would be a coordinated response. Hezbollah, Iran, the Iraqi militias, as well as the Houthis in Yemen would all respond. So the question is this the first of the four? Is Hezbollah now done, and now will the others join this effort? There was a big Shia Muslim festival, religious period of 40 days that ended yesterday or today, depending on how you look at the calendar. And that was, the expectation was once that period was ended, that's when the Iraqi militias and the Iranians would respond. That's why the markets are still spooked. That's why the oil prices are up. There's a fear and expectation that we've only seen the first of several responses.
As you said, there could be several waves to come. Yet at the same time, it must be said that the ceasefire negotiations continued. I know Hamas left those negotiations yesterday evening, but the framework and the construct of what Sullivan and Blinken went to the region for the 9th time last week, how would you describe those discussions?
Well, the fact that the discussions continued is a good sign. Yes, Hamas is still saying that the Israelis are asking for, are setting new demands and making negotiations impossible. The Israelis are saying Hamas.
But isn't that the theater of negotiation?
But that's you're exactly right. That's how negotiations are meant to go. There's meant to be this sort of give and take, and in the background, and whereas in the foreground, each side is blaming the others for the absence of progress. So as long as that continues, it should be seen as a good sign. Better talk than not talk at all. But the military activities that are taking place are sort of have an influence on everything that's going on. Should there be now a direct response from Iran, or should the Houthis fire off a big barrage of rockets? Should they attack targets in the Red Sea? It will have a bearing on the negotiators. It will have a bearing on the American view of the situation. Everyone is hoping for a de-escalation. But the two sides that are in the actual combat with the Israelis and Hamas, not yet.
I was speaking to Jumana Bisachi a little bit earlier. So the entire Middle East operation, reporting on this on an ongoing basis from Israel and from the Middle East. And she described it as being a de-escalatory escalation. And I think this is what we need to talk about, Iran's response. We have seen Iran's direct response onto Israel earlier in the year. Yes. And it's now a question of understanding, perhaps, the size and the scale of that response. That may well be the final demarcation. Well, one can never say final in these things, but that's going to be the critical issue.
Yes, it is. The way Iran responds is going to be crucial. It's taken a while now.
Yeah.
The Arbaeen religious period may be one explanation. Remember, Iran has had some political turmoil of its own. President died, a new election was held very quickly. Relative to the dead president, a more moderate figure was elected president. There is some political churn that's taking place. The Iranians are also very aware that if they overplay their hand, if their response is too hard, then they're risking not just the wrath of Israel coming down on them, but an American response. The Americans have sent in lots of military hardware into the region, including a aircraft carrier group and a missile submarine group. So daggers are still in their sheath, but there are plenty of daggers now in play in the region. And Iran has to be aware that it has to calibrate its response just so that it makes a mark without setting off a sequence of events that then it cannot control.
And just on the other side of that, you've got the Israeli Defense Minister, Yoav Gallant, speaking to Lloyd Austin, and he said, it's interesting, he said, we discussed the importance of avoiding regional escalation. So it's the language. Yeah. It's the language and the framing that nobody wants this to go to sort of Mach 3. I think that's the sense. Bobby.
All the three sides are making all the Israelis as well as Iran are making the same kind of noises. And I suppose in a region where it's so hard to find, we have to take optimism from that.
Bobby, thank you very much for joining me this morning. Bobby Ghosh on the Middle East situation. Coming up on the show, we'll set the agenda for the rest of the week. Everything you ever wanted from retail sales, through to the tech earnings. It's NVIDIA, in case you didn't realize. So a lot of people's wealth could take a bid or an offer quite aggressively on the back of that. Good morning from a beautiful New York.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bloomberg Brief this Monday morning. I'm Manus Cranny in New York. Your day ahead looks a little bit like this. Durable goods data, 8:30 a.m. Eastern time, and then we count down to Mary Daly joining the Bloomberg team, Fed President over at San Francisco. She joins the team with Mike McKee. That is at 2 p.m. today. Looking ahead to the rest of the week, I mean, it really is going to be crucial what NVIDIA earnings are on Wednesday. The godfather of AI, Jensen Huang, as Wedbush Securities like to call him. We'll also get a read on the consumer this week. You've got Nordstrom, Best Buy, Gap, and Dollar General all hitting the tape. Let's get you a little bit of a flavor of what you can expect there. Jennifer Bartashis, Bloomberg Intelligence Senior Retail Analyst, joins me now. good to have you with us. So we've heard from Walmart and Target in the past 2 weeks. And that really was a glimpse into the soul of the consumer, trading down, looking for value, and a hint of caution. What do you expect from these retailers this week? Good morning.
Good morning. Thanks for having me on. When we're looking ahead at retail earnings this week, it's a little bit of a continuation of last week. I think we're going to continue to see the impact of consumers trading down. That should benefit companies like Five Below, Dollar General, but it'll be a little bit more challenging for the Best Buys of the world, perhaps a little bit for Nordstrom as well. So, consumers are looking for value, and it's really turning into a story about execution by these individual companies and how well they're meeting that customer definition of value for their particular brand.
Yeah, and look, it depends in which area you're looking at, whether it's clothing, whether it's home improvements, whether it's the big stores. You just look at Macy's, obviously, choosy customers, they're trying to cut prices. Then you look at companies like Gap, which are in the turnaround story. But this is going to come down to margin, and a lot of the retailers have been posting better margin expansion. But the question is, does that show up in this clutch of earnings, and how can that endure?
Actually, we think that margins for the retailers reporting this week are going to be a little bit of a different story. And the real reason behind that is when you're talking about the Walmarts of the world, the Targets of the world, they're starting to really get benefit from what they consider alternative revenue streams. That's from advertising, that's from that sort of thing. And companies like Five Below, much smaller, don't really have that. Dollar General still in the early stages. Best Buy, again, same sort of thing, and they're also pressured by the fact that they sell a lot of appliances and bigger ticket items that customers are pulling back on. Nordstrom is another story. We're seeing fewer markdowns in stores, so they may actually have a little bit of opportunity for margin expansion. But this week, it's a little bit more cautious on the margin outlook.
So tell me this then, what sort of trade-offs or trade-downs are consumers prepared to make? And I suppose the question is then, who benefits in that in the longer-term trend?
Generally speaking, the retailers that are that cater to that middle-income, lower middle-income consumer benefit when people are trading down, because you see higher income households coming down into the dollar stores. So generally they do benefit, but we've had some missteps by the management teams at these companies. And so it's about also executing well on the retail basics. Are your stores clean? Are they filled with boxes, or are they easy to navigate? Those are the kinds of things where it turns customers off. Mm-hmm. So the better they execute, the more likely they are to be able to turn around those sales trends.
Jennifer, thank you very much. Let's see what those retailers deliver for us. Jennifer Bartashas of Bloomberg Intelligence. That's your Monday edition of Bloomberg Brief. Jonathan and the team are back on surveillance today. They'll count you down through the next 3 hours. Over to surveillance. Good morning.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which the women's.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
We're more vulnerable to another negative data point on the labor market.
There's no question that growth is slowing, the labor market's slowing.
People have moved violently in terms of the narrative of the economy, in terms of what the Fed should do.
They really need to get a move on. I wish they'd started earlier.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Chairman Powell pouring some rocket fuel on equities on Friday. The time has come. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday with stocks just short of all-time highs on the S&P 500. Your scores look like this on the S&P. Futures slightly positive by about 0.1%. On the Nasdaq 100 up by 0.2. On the Russell, the small cap outperformance continues up by 0.6. The line of Jackson Hole and the annual get-together in Wyoming reads as follows. We do not seek or welcome further cooling in labor market conditions. Lisa, that was the big one.
And he added that the slowdown in the labor market was, quote, unmistakable. I'm glad that you started with that. This is the reason why, to me, the key data point economically this week will be the jobless claims on Thursday, more than even core PCE and income and spending on Friday. What we're looking at is a moment where maybe the data point dependence is not really happening, and yet any kind of shift in the perception of the labor market will quickly move the markets to believe a 50 basis point rate cut is in the offing next month.
We'd love your impression of how things went on Friday. I have to say, sitting around the table anticipating that speech, I was looking back to 2022, August 22, the speech about paying a single mandate central bank, so to speak, focused on getting inflation down, not really paying much attention to the labor market at all because it was very strong. And I think we all thought 2 years later we'd come back to this dual mandate with a focus on both inflation and the labor market. I think Mohamed El-Erian and the FT on Friday absolutely nailed it. A Fed that is still seen as a single mandate central bank, but with the crucial qualification that it is now focused on avoiding higher unemployment rather than lowering inflation. We've gone from one all the way to the other in 2 years.
And you felt that in terms of the words that Jay Powell used. Just a year ago, he was talking about inflation, inflation, inflation. This time he was talking labor market, labor force, labor conditions, et cetera. That was the preeminent concern. There is a feeling here, and this was the research that was presented there as well, that this is a Federal Reserve that needs to get ahead of material weakening. What they didn't talk about is almost as important as what they did talk about. They didn't talk about the neutral rate. They didn't talk about sacrificing the idea of a 2% target for some sort of labor market security. And that, I think, was the takeaway for a lot of people who really see that any downside surprise in the labor market is going to cause a real turbocharging of those rate cuts.
Elisa already called in jobless claims the data point of the week. She'll go through the week ahead in just a moment. You're going to hear a lot about September 6th on this program this morning. The September 6th payrolls report for the month of August. The estimates so far, with 5 estimates in our survey at the moment, obviously that's going to build and this number might change, but 160 is the number at the moment. The median estimate in our survey, about 160. 160. If you are just joining us, welcome to the program. Let's start with equities. Futures at the moment look like this on the S&P 500. Just a little bit firmer. In the bond market, yields lower by a basis point or two, 378. More weak data out of Germany that we can talk about in just a moment. The euro, just a bit weaker. We're down 0.2%. Lisa, euro dollar, 111.72.
And we do get some inflation data out of Europe. I am actually very curious to see whether the ECB tries to match some of the expectations that we see from the Fed. More on that later. To me, really, the key will be the initial jobless claims on Thursday. The other key data point, obviously, is going to be Wednesday, NVIDIA reporting earnings. Who knew that earnings season went this late? A lot of people are kind of decrying that. The company has not missed estimates in the past 7 quarters. We do hear from Mary Daly today with our own Michael McKee in San Francisco. She couldn't make it to the Jackson Hole confab. And then, of course, on Friday, we do get those PCE data points, which is going to be important, although a lot of people already expect what it is, as well as ongoing spending and income for consumers. To me, really, John, the takeaway is going to be how much do we end up with this idea that, frankly, Rich Clarida of PIMCO, former vice chair, put well. Although the Fed likes to say it is data and not data point dependent, the August employment report, to your point, released on September 6th will likely be significant in the 25 versus 50 discussion at the next meeting.
Feels absolutely massive, and we'll get some answers to a few questions we've got on that in just a moment. Coming up on the program, your lineup this hour looks like this. Peter Chi of Academy on why he doesn't see a 50 basis point rate cut. Norman Rule of CSIS on mounting tensions in the Middle East. And Conrad de Quadros of Breen Capital on the Fed's muddled position. We begin with our top story. Stocks looking to build off 2 weeks of gains as traders assess the size and pace of rate cuts following Fed Chair Jay Powell's dovish pivot at Jackson Hole. Peter Chi of Academy writing the following: since my preferred path was 25 or even 50 in July, with a pause in September, I should probably lean towards 50, but I cannot. Pete joins us now for more. Pete, how big is this September 6th payrolls report, and what's the difference between going 25 or 50?
You know, one, I actually think ADP is going to take on a bit more meaning for markets. You know, if you go back now after all the adjustments, ADP was probably a more accurate reflection of the labor market than anything we had on NFP. And, you know, probably like a lot of other people, I'm wondering what would have happened or where would we be now on rates, markets, had we actually had accurate job numbers instead of having to revise them down by 815,000. But we are where we are, so we got to live with it. So I think people will take a little bit of a grain of salt in the August data that comes out September 6th. I think we'll watch ADP. We're going to watch JOLTS. I think people are really trying to figure out what is the state of the labor. And I think it's going to take a little bit more weakness or materially more to push the Fed to 50. They've been slow to move. Yes, he pivoted. But I think 25 is probably what we get unless we get almost negative payrolls this week or next week.
I'd love your thoughts on how we'd respond to good data versus bad based on what you just said. Are we more inclined to put more weight on weak data here and ignore strength?
I think we are. I think if we get strong payroll data, we're definitely not going to zero in terms of rate cuts, right? We're 25s locked in. I think if we get a really strong payroll, everyone will kind of, what's wrong with this data? It's all going to get revised down. So I think we're more susceptible to a weak, print. I do think people are going to, again, look at the JOLTS, try and divine more information from JOLTS, the quits rate, the hires rate, kind of that detail. They're going to look at ADP, even jobless claims, which I always view as kind of a secondary order data effect. People are going to look at more because we just can't trust that establishment headline the day it comes out anymore.
Peter, I love that you go to ADP because a lot of people always say, how do we even read this? And you're saying it might be more accurate than the establishment survey. Michael Darda of Roth MKM over the weekend came out with a note pointing out that typically when the Fed started cutting rates, it was pretty negative for risk assets. Historically, that's pretty much been the consistent theme. Do you think that this market is underpricing the risk, that it might not be as positive as the Fed is hoping?
Yeah, I think we've become a little bit too conditioned to lower rates automatically good for stocks. And to me, the big case is going to be, and we wrote about the Fed plodding along. So my view is that the Fed is going to be slow to respond to market conditions. I think that happened in July. We're back to all-time highs. But if that continues, right, we're now pricing in 8 cuts in the next 8 meetings. That seems too optimistic from the Fed, unless the data is so awful. So I think risk assets are a little bit susceptible. But to me, risk assets are going to be determined, 1, by NVIDIA. That's going to be a huge earnings report. And 2, if you look last week, we had all this chop back and forth. 0.5% moves were kind of like happening like that. 1% moves up, down, all around. And I think we are really at the mercy of algos, quant funds, zero data expiration options. And more people are talking about the rebalancing of these leveraged ETFs. And there's more and more single name leveraged ETFs. The market's kind of sloppy to trade, I think, right now because of that.
Peter, before we go to NVIDIA and the earnings on Wednesday, I want to go to this. I mean, I read your note over the weekend, and I was thinking when the people are away, the algos will play, and there's this question of what the consequence of some of this choppiness, this lack of liquidity, as you were talking about, really is. I mean, is there a bigger systemic type of consequence to the chop that we're seeing that's expected to continue?
You know, I think what we saw in early part of August is what we're going to start seeing more and more of is these kind of gradual, and I guess better than gradual, right? Fairly rapid moves higher, but really rapid moves lower. And I think you're going to have to play around that. If you're trying to position your portfolio, risk management, I think you're in an era where take some profits, take some chips off the table as it's doing well, as we kind of went from everyone so bearish to everyone so bullish. Because these downside moves, I think, are going to be sharp, dramatic, and they're very accentuated by this leveraged ETF rebalancing, by the zero data expiration options, this complete lack of liquidity. So that's my gameplay right now is very relatively small position size, take chips off the table, and set up for these rapid downside moves, because if you're not prepared for them, you cannot catch them.
Pete, give us some more detail on that. So let's talk about where leadership has been over the last week. Small caps, regional banks up by more than 5% in the past week. When you say take some chips off the table, are you talking about those pockets of the market?
No, in fact, you're right. I think you want to take the chips off the table in the NASDAQ 100. That's where a lot of the growth had been. And I am now comfortable. I like the banking sector. I think you're seeing that. I think you're starting to see the Russell 2000 do well. I could see commercial real estate doing well in here. So I'm looking for companies that have been kind of left behind, right? This has been, for at least a year or probably longer, momentum has been the one factor that has worked really well. And I think we might have the case to see momentum start building in these Russell 2000 type stocks if that momentum starts developing, and not like a two-day move like we saw last month, something a little bit more sustained. You start driving the momentum money in there, and given the nature of the market cap of these, I think you could see a really nice run into small caps and the banks.
Can we talk about the other side of that story? Wednesday, we do get NVIDIA earnings, and the expectation based into options is something like a 9% move on the heels of that. We've had 7 straight quarters where they've outperformed, upgraded their forecasts. How vulnerable is this market, given how big it is, how dominant it is in the indexes, to some sort of downside surprise?
I think it's definitely more susceptible to a downside move than an upside. Yes, it's great. Stocks off its high. It can still go much higher. But I do feel like there's selling pressure. People are kind of selling into some rallies now. People are questioning longer term. If you get a downside move, I think it could be pretty aggressive, and it will impact the indices, right? I think everyone now, we're really having to try and adjust how we think about passive, right? When 50% of these indices are 5 to 15 names, right? That's too much. So they don't behave as passive. So any outflows from the market because of one stock have a rapid ripple effect, which again is why I think you're safer in the Russell 2000 right now, because it would not be as impacted by that sort of ripple effect.
Pete, before you go, one final question. Can we ignore dollar yen now?
You know, I think that was overstated how much people were paying attention to. I think you want to keep an eye on it. Maybe if it breaks through, down below 140, it becomes an issue again. But again, I felt like at the time that was, like the boogeyman. Everyone was talking about it. I don't think it was as prevalent as it was. So to me, though, this is much more still about the AI story and the economy and how bad or good jobs are and how quickly the Fed can respond. So I'm not paying that much attention to the yen.
Got it. Peter Schiff, Academy. Not alone, seemingly, based on the price action of Friday. Certainly not the boogeyman on Friday. At least the dollar yen down 1.3% in Friday's session. We're down to the low 140s now.
We saw a massive sell-off in the dollar. It caused George Saravelis over at Deutsche Bank to rethink his strong dollar call, considering the fact that there are very few catalysts that people see, and yet that has not been disruptive to the risk trade. And that really signals maybe we have shifted out of this yen carry trade unwind, although some people are talking about the revival in other pockets. But, the boogeyman can always come back.
We'll see. For now, just a pure observation. A bit more yen strength, 144 against the dollar, and equity's still doing okay, up by 0.2% on the S&P. Let's take the opportunity to get you some stories from elsewhere this morning with your Bloomberg Brief. Here's Jahara Heckes.
Hi, John. China and the Philippines are trading blame after a Chinese Coast Guard ship collided with a Philippine vessel in a disputed area of the South China Sea. Manila claims its vessel was subject to, quote, aggressive and dangerous maneuvers from 8 Chinese ships, saying they rammed into its ship and fired water cannons. The incident is the latest in a series that has fueled tensions between the two nations. Meanwhile, Bitcoin touching $65,000 for the first time in about 3 weeks earlier today before pulling back. The rally triggered by growing demand for Bitcoin ETFs as the Federal Reserve signals it's ready to loosen monetary policy. The cryptocurrency advanced more than 7% last week. That's the sharpest increase in a week since mid-July. And Boeing facing questions over the future of its Starliner program after NASA turned to SpaceX to return 2 astronauts stuck on the International Space Station. NASA announced the decision after weeks of testing and debate over Boeing's faulty spacecraft. The astronauts will stay at the ISS for about 6 more months before flying home in February on SpaceX's Crew 9 vehicle. The test flight was originally intended to last about 9 days. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. We'll catch up with Guy Johnson out of London in the next hour on this programme. I can't believe the story's not bigger. 2 astronauts stuck in space were meant to be there for 9 days. They're going to be there for months, see you in 2025.
Yeah, can you imagine? Can you imagine being one of them if they thought that they were going to come home next month? And it's like, just kidding. Just stay up there until February.
You should see my face when a flight gets delayed by about 2 hours.
Actually,
so never mind, 30 minutes. 30-minute delays.
I think that maybe that wasn't in your offing in terms of your career choices. Yeah, exactly.
Absolutely. They don't want me in NASA.
There's more to that story, though, too. It's really interesting.
We'll talk about it. Up next on the programme, finding attack lines that stick.
All the while, he intends to enact what in effect is a national sales tax, call it a Trump tax.
There's this whole thing that Kamala Harris did at the convention where she made a bunch of claims about what would happen and not enough actually reflection on what already happened.
The conversation up next, live from New York City this morning. Good morning.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Two weeks of gains on the S&P 500. Can we make it week 3? Here's the start. Equity futures this morning up by 0.2%. Yields lower by, let's call it a single basis point on the 10-year, 378.57. Under surveillance this morning, finding attack lines that stick.
All the while, he intends to enact what in effect is a national sales tax, call it a Trump tax.
There's this whole thing that Kamala Harris did at the convention where she made a bunch of claims about what would happen and not enough actually reflection on what already happened, right? Because Donald Trump was already president. He used tariffs to bring manufacturing jobs back to our country, and I think he'll do it again.
So here's the latest. Republicans framing their attack lines as the political focus shifts to the first presidential debate on September 10. Terry Haynes of Pangea Policy writing this. The debate and the run-up to it very likely defines the race. Trump's goal in this quiet period is obvious. It's his turn to play spaghetti politics and find attack lines that land and allow him to gain some momentum. Terry joins us now for more. Terry, let's start with September 10th. There's a bit of tension emerging between the Trump campaign and ABC News and a question mark as to whether that's actually going to happen at all. What's your reaction to that?
Oh, I think it probably still does, John. You got a situation at bottom where Trump withdraws from the debate based on some real or imagined slight by the news network. He looks like he's pulling out and won't want to face Harris. So I don't think that's the case at all.
It's a big event for both of them to really define each other, or at least attempt to, Terry. Talk to me about your base case at the moment, how things have changed for you in the last couple of weeks.
Well, my base case is that Harris, I think, is about 60% likely to become president. I think the momentum, the aspirationalness of the thing, and frankly, the appeal of the new as opposed to the kind of dreary last decade that we've had. I think that's how voters are increasingly looking at it. I think that really kind of carries her, and you see Trump on the defensive, not really able to land a lot of punches. In your lead-in, Vance makes my point. He spends 30 seconds talking about the mechanism of how you should see this race, rather than making a case on policy specifics. If you have to argue the chairs on the Titanic deck, you're losing.
If they're trying to make an argument on policy specifics, they probably are having trouble doing so, though, because we haven't really gotten policy specifics. That's been one of the criticisms, that, frankly, this is a vibe-driven type of campaign, and it really isn't heavy in any details of policy. Is that landing with undecided voters?
I don't think that matters to undecided voters. Undecided voters, by and large, care about what the candidate says that he or she is going to do. They're not really interested in the policy superstructure underneath or the specifics of any of that. They care about priorities. They care about results. And if they think that the candidate can deliver those, that's good for the candidate.
What's striking to me, Terry, is when I was wondering over the weekend and I was listening to both sides kind of trying to frame the arguments and thinking about whether this could be an entirely vibe-driven election cycle, you point out that it's likely that 1/2 or more of the POTUS ballots get cast early. 69% of voters nationwide cast their ballot non-traditionally by mail and or before Election Day. How many people do you think are going to cast this ballot before anything materially changes, potentially even before that September 10th debate?
Well, right. There will be a big rush to do that. And both parties, but particularly Democrats, have structures in place to try to encourage that. You're absolutely right. I mean, that the statistics that I cited were from the Census Bureau. And even if you knock off a little for the fact that 2020 was the big COVID year, let's just say roughly half of those votes get cast early and in a non-traditional, meaning by mail sort of sense. And, what you've got is a situation where, the vibiness around the Harris election can turn into votes pretty early. And that's exactly what the Democrats want to do.
Terry, for anyone familiar with the polling, what you'll see is a head-to-head number, and then you'll see a number that includes third-party candidates. RFK has stepped out. Terry, what's your sense of how that will influence the numbers in the polling in the weeks to come?
Two things. One is I said right out of the box, I thought that Kennedy leaving the race wasn't going to make much of a difference. His numbers went way through the floor over the past couple of months, and that was something that I anticipated. But my assumption is, and I'll be interested to see the polling, my assumption is that a lot of those people went home to Harris. Firstly. So secondly, anybody that ends up going to Trump doesn't give Trump a particular bump. It's, kind of righting the ship a little bit to compensate for the people that already went home to Harris. Secondly, I think Kennedy is in a situation where even in the swing states, he doesn't bring a lot. Other pollsters who have been looking at this, Nate Silver, for example, showed that there was something like 0.3% that go to Trump. So not a big number. Thirdly, I would just say parenthetically about the polls, we haven't had a poll that registered public opinion since the 21st. A week ago. So we're waiting for the Harris kind of bump polls, number one. Number two, what we're waiting for is likely voter rather than registered voter polls, which will give us a more distilled idea of where the electorate actually is.
Still waiting for a sit-down interview as well, Terry. Do you remember the words of the vice president that she'd talk to her team and get something scheduled before the end of the month? What's happened with that?
Well, I think they'll dodge that as long as they can. They will do the things that they need to do that check the box of a live interview and are as controllable as possible. And so that probably means a friendlier network than, say, Bloomberg, for example. But you're in a situation where she's not going to want to be asked a lot of hard questions. She doesn't have to answer a lot of hard questions, and she won't. So she won't want to, and she won't have to. And that's pretty much the end of it, I think.
I want to finish up with something that feels like it's out of left field, but it kind of wasn't. And we were talking about the sort of SpaceX question over the weekend that arose that the NASA astronauts are going to be taken back by a SpaceX spacecraft rather than a Boeing one. This comes at a time where Kamala Harris is actually in charge of the space program. How do you view some of the policy decisions, like dodging any potential accident through an election lens at a time where any misstep, any sort of exogenous type of development could derail some of the vibes that we're feeling that they seem to be trying to ride?
Yeah, I don't think that's out of left field at all. The competence of the federal government ought to be a much bigger issue than it is for no matter who's in charge of it at a particular time. That's a double-edged sword, by the way. You can go back to COVID and to say anything you want about COVID or Dr. Fauci or anything else, and Trump was the president at the time, so this can be prosecuted both ways. But the competence of the federal government is a significant problem. Harris shares some culpability for that, as you point out. But I think she's going to dodge it by and large because people other than her, bureaucrats, are going to be seen as the decision makers and all that.
Are we not friendly, Terry? That's all I want to know. Are we not friendly?
Oh, when I said that, I thought it was.
You don't like us? We're not.
You all will prosecute that fairly and without fear or favor.
We'd ask actual questions, Terry, which is probably why that interview won't happen anytime soon.
Well, there's that, yes.
Terry Haynes of Pangea Policy. Terry, thank you, sir. Appreciate it. I've got a policy suggestion for everyone, and you let me know if you're on board with this. It's fantastic. It's legislation that's just come into effect in Australia. Australians can now legally ignore unreasonable after-hours work calls and emails under this new legislation. Under the laws, employers face fines of up to $63,000 for getting in touch with an employee for non-essential reasons outside of working hours. You in?
Sure. I want to understand.
It's pretty punchy, right?
I want to understand what is non-essential, what is essential, right?
Sure.
I mean, at what point could someone just say that was not essential? Please pay me $63,000.
I'm waiting for the courts to kind of start working through this.
Yeah.
But I imagine it's going to happen pretty quickly. You're going to get that first phone call or email and say, nope, and then call your lawyer.
Yeah, I actually would like to see how this gets carried out, because I would like to see in practice the due process of reasonable versus unreasonable.
Who's on board with that legislation? Coming up on the program. Tensions mounting in the Middle East as Israel takes out thousands of missile launchers in Lebanon. The latest on that story out of the region with Jemana Basechi, and the latest reaction from Norman Rule of CSIS.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The right to disconnect. The Australian Prime Minister, these words I mentioned are very popular. For many Australians, I think they're getting frustrated that they're expected to be on their phones, their emails, all of that for 24 hours a day. The Australian PM said it's a mental health issue, frankly.
I think a lot of people would agree. There is a balance between efficiency and quality of life, and getting that balance correct is the right way to go. And the question is, how do you achieve that balance?
How does this work on Wall Street?
Well, I'm trying to get there in a diplomatic way.
Give me a break.
Well, I mean, exactly. What business would want to run somewhere where they have to, you know, pay $63,000 if they message someone and say, hey, what about that deal? I think it's coming up for, you know, expiration today.
Just doesn't work in practice, does it?
But that's the thing, and it's efficiency, it's a lot of things. But at the same time,
it's sort of like politically pandering to the electorate as well?
I'm not going to be so skeptical. I'm not like that.
It's not about buying votes, winning votes. Up by 0.2 on the S&P 500. Scores look like this.
Thank you.
Futures with a lift. Lisa's got things to say about crude in just a moment. We'll get to it in a second. The Nasdaq up by 0.2%. The Nasdaq 100, a third week of gains last week. For the first time since June. It's been a while. In the bond market, front end of the curve where all the action is, a double-digit basis point move in last week's sessions. The 2-year down to 389.35. We're down by about 2 basis points on a session. On a 10-year down by, let's call it half a basis point today to 379.33. At least the whole curve, 2s out to 30s, just dropping, particularly following the words from Chairman Powell.
What was notable to me was that Fed Chair Jay Powell was notably dovish, even versus expectations. He didn't seem to talk about measured in terms of the pace of rate cuts. He seemed to open the door to bigger rate cuts down the pike. And frankly, one conversation that I thought was particularly telling was with Loretta Mester, the former Cleveland Fed president, who said they might not start with a 25 basis point rate cut. They probably won't, but that doesn't mean that they won't go to a 50 basis point one at the next meeting. They don't want to start big. That doesn't mean they're not going to go big. And that, I think, is what the market is starting to price in.
You nailed it. They've said they're not data point dependent, but ultimately this whole conversation about 25 versus 50 is data point dependent. It comes down to one data point, September 6th payrolls. Most people agree with that.
Although I think that Peter Scheer was correct when he said that the bar is pretty high. And this is something that we heard also from Patrick Harker of the Philadelphia Fed, where he was saying that 25 is probably it, because they don't want to move the markets even more. But again, that goes to this question of, are they then going to signal a 50 basis point at the next one? Are they basically going to do it anyway, right? I mean, what are we actually talking about? And to this degree, I mean, Tom was
What are we talking about?
Well, Tom was very dismissive. He was saying to me, you know, people talk about 25 or 50, who cares? Like, it's, and you know, on one hand, right. But if they go 50, the market's going to price in 200. And if they go 25, the market will stay where it is. And that, I think, is what they want to get to.
I've got a question for later in the program. Who was speaking on Friday? Was that the Federal Reserve Chairman, his own opinion, or was he reflecting the consensus on the committee? Who was speaking on Friday?
That's a great question, and we do have Betsy Duke, a former Federal Reserve governor, coming up. And she said, interesting that he said, my confidence, while the rest of the comments reflected the FOMC actions and judgments. It's a great question and one that we can ask her.
It just sounded like there was some daylight between him and the other Fed officials we heard coming into that speech. So that's the equity market, the bond market. Let's finish on the commodity market. Crude with a bit of a pop in the last 30 minutes or so. Back through 80 on Brent. Lisa, $80.75.
Okay, there was this headline that caught my attention that the Libya Eastern government says that it will stop all oil production and exports. This is the reason why you saw oil pop. This is a debate over, frankly, government rule. This is the central bank governor who is being threatened to be pushed out of office in the region, and in response, he is shutting down crude. To me, it just highlights that we're also focused on what happens with Lebanon, with Iran, with Israel, but it's not like the rest of the world is quiescent. It's not as though the rest of the world just is completely quiet. There's some real kind of struggles there, and you're seeing that percolate this morning.
Crude up across the board, Brent and WTI by something like 2 percentage points. One to watch, keep on the radar throughout the session this morning. Under surveillance this morning, Fed Chair Jay Powell's dovish pivot at Jackson Hole, leaving traders assessing the size and pace of potential rate cuts. We'll hear from Atlanta Fed President Raphael Bostic later this week, as well as the San Francisco Fed President Mary Daly sitting down with Bloomberg's Michael McKee at 2 p.m. Eastern time. We'll see how much distance, daylight there is between Chairman Powell and the rest of the committee a little bit later on. Let's turn to this story. We mentioned it a little bit earlier. NASA announcing it won't send astronauts home from the International Space Station on Boeing's Starliner, instead tapping Elon Musk's SpaceX to handle the mission. The recovery is slated to launch in late September, which would have the astronauts back on U.S. soil in February, months later than initially planned. What an embarrassing moment for Boeing.
And it comes after they already have posted billions of dollars of losses tied to all sorts of snafus and hiccups in their space program. A real question now, soul searching for the new CEO, who's coming into a whole host of problems. Does he jettison the space program? Because at this point, is it more trouble than it's worth? And how much does the U.S. government want to foster some sort of competitive process to ensure that there aren't the same kind of glitches and issues that keep astronauts in space for 6 months longer?
What do you make of them tapping SpaceX? What a win for Musk, eh?
It's a win for Musk, and it's coming from an administration that's had some tense relations with him. And I wonder how much he'll view this as sort of an olive branch to him. I don't know if I'm reading too much into this. I will just say that this is me purely reading through this, and that was my first thought. I will say, though, it highlights how they're going to safety above any type of allegiance or desired outcome, because what they want to avoid is some sort of loss of a crew, which would be catastrophic for them, both politically and just on a human level. And that is what they really are putting first.
More on Boeing a little bit later on this morning. Guy Johnson out of London joining us in about 60 minutes of time. Let's turn to tensions mounting in the Middle East. Israel taking out thousands of Hezbollah missile launchers in what it's calling a preemptive strike, saying Hezbollah was about to fire thousands of missiles at northern Israel. Jamala joins us now out of the region, Bloomberg's very own. Jamala, let's get to this story. What is the latest, and what was your reaction to the news over the weekend?
Look, the way I've been describing this, Don and Lisa, is a de-escalatory escalation. We knew for a couple of weeks now that Hezbollah had been planning retaliation for the killing of its senior commander, end of July, Fuad Shukr. They had mentioned many times in the course of the last couple of weeks that a retaliation, a revenge strike was forthcoming. And the question was what shape or format that was going to take. Were Hezbollah going to act unilaterally? Were they going to go alongside other Iranian proxies in the region? Were Iran going to participate as well? Well, we got the answer this weekend. And what we saw was, in fact, quite a limited and calculated response. In the end, Hezbollah did act alone. Israel managed to intercept many of the rockets that potentially could have got fired. Israel saying that they intercepted thousands of rockets that were going to be directed towards central Israel. But Hezbollah themselves said that they managed to successfully launch more than 340 Katyusha rockets. But in the end, it didn't sustain a lot of damage. There was one life lost on the back of it, but they did not target any civilians. It was limited in terms of objective and nature, but from their perspective, they're presenting it as a victory of some sorts. And later in the afternoon yesterday, we got comments from the Secretary General Hassan Nasrallah saying that phase one of the retaliation was over. They're in wait-and-see mode to assess whether or not they need to do more. But his message to the Lebanese people is, you can relax now, which is very strange wording, given everything that has gone on in the border in the last couple of months. And I should say, from Israel's perspective, they did declare a 48-hour state of emergency, but by the end of the day, the Tel Aviv stock market was actually up on the day. So it does tell you that there is a little bit of a sense of relief
that this wasn't worse or that it was a more broader engagement from the region.
This is the reason why, Jumana, I was sort of surprised that some of the headlines this morning were threats of an escalation rock the Middle East. Was this an escalation or a de-escalation?
Yeah, I mean, that's why I've been calling it a de-escalatory escalation, because we knew that a retaliation was coming. But the other big question that people still have, of course, is what Iran do from here, because let's not forget that the same evening that the Hezbollah commander was killed, you also had the assassination of Ismail Haniyeh take place in Tehran. It was a very embarrassing event for Iranian security, and they have since vowed to retaliate in some shape or format as well. Interesting to hear from the Iranian foreign minister this morning. He was saying that if they do respond, it will be definite and calculated, but they are not seeking to increase tensions. And I think this is the operative word here. It does not seem like Iran want to get dragged into a bigger war. And that is one of the reasons why the region, at least right now, seems to have calmed down just a couple of notches from that heightened sense of alert that it's been on the last couple of weeks.
Somewhat counterintuitive, but just brilliant framing as always. Jumana, out of the region in Dubai this morning. Let's cross over to Norman Rule of CSIS. Norm, I think Lisa asked the right question, and Jumana gave us the framing to answer it. Would you agree with that? Was this an escalation or a de-escalation?
Good morning. It was certainly an escalation. Anytime you have 100 Israeli aircraft flying over Lebanon and 300 rockets fired into Israel, in normal times, that would be an extraordinary event. It has been de-escalated because each party does not seek a conventional war, and the rhetoric, even the nature of the strikes, which were limited to military sites in Israel from Hezbollah and southern Lebanon, shows that each side is not trying to turn this into a conventional conflict. But even that is consistent with how this entire conflict has been maintained since October. No one is looking for a war. Iran and its proxies have many reasons to continue their attacks on Israel.
I guess another way of asking this, Norm, would be, does this increase or decrease the chances of a ceasefire?
It has no impact on the ceasefire. The ceasefire is going to be an issue between Yahya Sinwar, who has very little reason to release hostages since it impacts his survival, and Benjamin Netanyahu, who has been repeatedly criticized by his own security establishment for not making the hostages as great a priority as the destruction of Hamas. There is no public evidence that the ceasefire talks will succeed, although diplomacy works best in quiet, and there could be reasons for optimism that are not yet made public.
There also is this bigger question about what the significance of whether the U.S. has influence over Israel anymore, the degree to which it does have influence over Israel actually is. There was some suggestion that the U.S. was not aware of what was about to take place, was not a participant, and then had to respond by sending military craft to the region. What do you make of that in terms of the U.S.'s influence on Israel?
Well, look, when you say was not aware of, do you mean the killing of Ismail Haniyeh, or do you mean the Lebanon event?
It's more a question of whether they were part of or understood what happened with Lebanon over the weekend.
There is no question the United States would have been completely aware of Lebanese Hezbollah activities. The nature of U.S. And Israeli intelligence relationship is extremely tight. And also we have a vast array of military personnel and capacity in the region which are capable of monitoring Hezbollah operations as well. It's likely that geospatial and other intelligence collection methods were used to monitor Lebanese Hezbollah, and we probably were aware of what was happening.
Norm, look at the tension and where we're at. Let's take a giant step back. Tension continues between Israel and Lebanon. The war continues between Israel and Hamas. And the backdrop, we've heard from several officials who have given us the impression that we're pretty close to striking some kind of deal around ceasefire talks. What evidence is there, Norman, that we're getting closer?
Nothing public. There might be something in private again, but I think you're going to see that as Israel closes down its operations in Gaza or moves them to a lower level, the weight of Israel Defense Forces' focus is going to move towards Lebanon, both to deter Lebanese Hezbollah and also to create security conditions that enable 60,000 Israelis to return to their homes.
Norman Rule of CSIS. Norm, thank you, sir. Appreciate it. Tension continues. Tragic loss of life continues. Talks continue too. We've been told repeatedly we're getting closer. that this was the moment to make something happen, to strike a deal around ceasefire talks. And to Norm's point, you never know what's happening behind closed doors. You never know how close we actually are. But in public, feels like we're as far away as we always have been.
This is a complicated moment. It's also complicated because you could tell that Iran and Lebanon do not want a wider altercation. And at the same time, there's a real pressure the longer that the altercation goes on in Gaza with domestic pressure. People who are seeing the news and are getting very angry about it. So it's a very tense situation, and it's hard to get a real handle on what's actually going on.
If you are just joining us this morning, welcome to the program. Just to touch base on where the scores are right now. Equity futures on the S&P positive by a little more than 0.1%. With an update on stories elsewhere, with your Bloomberg brief, here's Yahara Hackers.
Hi, John. Germany's business outlook held at its lowest level since February. The IFO Institute's expectations gauge dipped to 86.8 in August from a revised 87 the previous month, with expectations worsening in both manufacturing and services. Optimism that Germany would rebound in 2024 from 2 years of almost zero growth has faded as an anticipated jump in consumer spending failed to materialize, and the country's industrial sector continues to struggle. Meanwhile, the firm behind the messaging app Telegram has questioned the grounds for France's detention of its CEO, who was taken into custody at a Paris airport over the weekend. Russian-born billionaire Pavel Durov was detained on suspicion of failing to take steps to prevent criminal use of the app. This, according to AFP. And Dutch authorities fined Uber around $324 million for transferring personal data of European taxi drivers to the U.S., and the largest penalty ever issued by its watchdog group against any company. The Dutch Data Protection Authority said Uber was collecting information of drivers from Europe, such as taxi licenses, location data, and in some cases criminal and medical data, and then retaining them on servers in the U.S. Uber indicated it plans to object to the fine. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, the time has come.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
That conversation up next, live from New York. You're watching Bloomberg TV.
About artificial intelligence. Is artificial intelligence going to enable you and others to say we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry, and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models, and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From New York City, looking to build on 2 weeks of gains on the S&P 500. Equity futures at the moment positive by 0.15%. In the bond market, yields lower by a basis point. The 10-year 378. 95. Under surveillance this morning, the time has come.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions.
So here's the latest. The Federal Reserve preparing to cut interest rates, with Chair Powell now firmly focused on the labor market. Conrad de Quadros of Breen Capital writing the following. The August jobs report derailed the first rate hike in 2015, and we appear to have the possibility that it could push the Fed to a half-point cut in 2024. He has left the markets to be potentially hypersensitive to upcoming economic releases. Conrad joins us now. Conrad, get into that. Are you saying that September 6th is truly the difference between going 25 or 50?
Good morning, John. I think that it is going to be the big decider of the size of that rate cut. Now, I think that my baseline is that the Fed cuts by 25 basis points, but the reason why I brought up that prior incident was, we had all the discussion heading into the September 2015 meeting when the Fed was looking to hike rates for the first time about how they shouldn't be overly sensitive to a particular data release. Then we got a disappointing August jobs report in September 2015, and the Fed kicked the first rate hike to December of that year. And we're setting up for a similar kind of situation this time. If we were to get a very disappointing jobs report for August on September 6th, and the market were to move to significantly price in a 50 basis point rate cut, I don't think that the data justify that kind of a move. I think we need a strong signal that the economy is in recession or severe stress in the financial system. We don't see, or I don't believe there's evidence of either. But the markets could move towards a 50 basis point rate cut on that September 6th jobs report. And then that puts the Fed in a very difficult position. Do they want to disappoint markets? And I think probably not.
And if they cut by 50 basis points, how much more do markets price in later on in the year, with already more than 200 basis points of rate cuts priced in by the end of next year? A question that I have is just, how much is inflation actually off the table? Is inflation even in the picture anymore for the Federal Reserve, and should it be?
Well, Lisa, that's a very good point, because, of course, this week, the important data release is an inflation data release, and that comes out on Friday. And the broad consensus is that we get a 0.2 core PCE reading, which I think would be welcomed by the Fed. That's the kind of gain that the Fed is looking for. But on a 0.2 increase, we'll get a slight pickup in the year-over-year inflation rate to 2.7% from 2.6%. And Powell at the July 31st press conference has re-emphasized the year-over-year rates rather than the shorter-term rate. So 0.2 on a short term is a great number. It'd be consistent, I think, if we look at 3-month inflation rates with inflation close to 2. But 2.6 but 2.7 on the year-over-year rate is not the direction that the Fed is looking for. So can they really say inflation is, I think that they're not telling us that they're not looking at inflation anymore. They're just saying that they're looking at inflation and employment on more of an even setting, that both of those two mandates are important to them. But clearly on the inflation data, and I think that will be the message on Friday, is that we can't completely ignore the inflation data yet, and we're not yet at target, and the Fed still has some work to do there.
There's a question here, too, about how much they're really giving a destination in terms of what the neutral rate eventually will be. How important is that, given the fact that they're talking about don't focus on the pace, focus on the destination?
I think it's very important, because if we look at what the Fed is telling us in its SEPs with the 2.8% Fed funds rate, that's kind of supposed to be, I think, the signal to markets of where the destination is. And I'm not convinced that the Fed believes that as strongly as they may have in terms of where the long run rate on the SEPs was pre-pandemic. So the markets are taking that, though, right? If we look at where rates are headed in interest rate futures, we have by the end of next year a Fed funds rate that's priced close to 3%. But is that really neutral in this current environment? And I don't think that that's the case. I think the neutral interest rate was probably never as low as the Fed was estimating pre-pandemic. And now they're not as convinced that they can cite that rate with a high degree of confidence. And so that's where I think the disconnect is. Look, if we have a recession, I would not be surprised if we see the Fed funds rate head as low as 3%. If we don't have a recession, though, and this is just an adjustment, and I think that's the signaling the Fed is giving us, that they don't believe that there's a recession. They think that there just needs to be some adjustment to a Fed funds rate that doesn't need to be as restrictive, with inflation now closer to target, but not yet there. So we need restrictive policy. It just doesn't need to be as restrictive. 3% Fed funds rate, I think, is accommodative. And I think that most Fed officials would say the same thing, even though that's in conflict with what the SEPs are telling us. That long-run date in the SEP is very problematic.
Hey, Conrad, if we reflect and just take a little bit of a step back again, if we reflect on what this get-together was meant to be about, it's meant to be about the transmission of monetary policy, the efficacy of policy, and he alluded to something pretty important in the speech. He basically suggested that high rates weren't a big factor in reducing inflation, that the story in the labor market was a supply-side one, which I think begs the question, Conrad, just how restrictive the chairman thinks we actually are.
Yeah, that's a great question, John. And I think, depending on what we're looking at, you come to different answers. I mean, I think the Fed needs to take a bit more credit for the disinflation that we've had. I do think that that's a function. The inflation that we had was a consequence of too accommodative policy for too long and dismissiveness of the inflation dynamics. Now the Fed responded, starting in 2022, very aggressively to the rise in inflation. And I think that that's the reason why we have had this disinflation, and the Fed should take credit for that. Now, the other questions are, the economy, outside of some signals, and I don't want to be completely dismissive of the somewhat disconcerting signals from the unemployment rate, but at the same time, we have jobless claims that are very low. So if there has been that degree of increase in unemployment, why aren't those people filing unemployment benefits? We have things like a very important indicator to us at Breen is profits. That's another important release that we get this week within the GDP report. We have profit margins that are still very healthy, and as a result of that, you see the response in the equity market with equity prices that are very high. So all of those things don't suggest that policy is overly restrictive and therefore needs to be adjusted very aggressively. But I do think you can make the case that some modest rate cuts are that would be a reasonable path for the Fed to be on, given the disinflation that we've had. And I think that's the path that the Fed should take. But what happened on Friday with the speech was, and I don't think it was a bad speech, but I think that Powell probably could have done a little bit more to drive home that what the Fed is thinking now is more in terms of modest adjustments in the Fed funds, or maybe take a little bit of the emphasis off the September meeting.
Got it.
Sorry, the September 6th employment report.
Yeah. Conrad, thank you, sir. Conrad de Quadros there of Breen Capital. Looking ahead, Neil Dutt of Renmac. He did the word search on the speech. No mention of gradual at all. The word didn't come up in the speech at all on Friday. Gradual reductions. Looking ahead to Thursday, jobless claims 232. 232 is the estimate, Lisa. The previous week, 232.
And we got it bang on. And you asked this question, and it was a really good one earlier, which is how much are people biased to a downside surprise? But if it's, if we've got fewer jobless claims filed than expected, will that measure? Or will people just say, just wait a while and then a week and more materially?
Based on the bias on Wall Street at the moment, the people we speak to, they seem to be more willing to embrace the weaker data and ignore the strength. But we'll see. At least the economists waiting for those revisions on non-farm payrolls. This is an ongoing conversation. In the next hour on Bloomberg Surveillance, Linda Dussel of Federated Hermes, Henrietta Trays of Veda Partners, Bloomberg's Guy Johnson on the latest with SpaceX, and former Fed Governor Betsy Duke from New York. The second hour of Bloomberg Surveillance up next.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investment that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
DOJ or other authorities
Could face bigger challenges next.
Was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
We've got this momentum-driven bull market.
The market's essentially pricing in, I would say, 20% chance of a recession.
The market is rightfully focused on the importance of growth holding up.
The market's kind of transitioned now to we're in a slowing growth environment. So now we have to trade slowing growth and decide whether hard lands or soft lands.
It's very plausible that we don't have a significant correction and we grind higher from these levels rather than going lower.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance begins right now as Chairman Powell supports new leadership in this equity market. Check out that leadership. Last week, the small caps up by more than 3.5%. The regional banks up by more than 5%. This morning, your outperformance on the Russell. The small caps up by 0.9%. On the S&P, up by 0.1%. On the NASDAQ 100, up by 0.07. Your week ahead is absolutely stacked. It's always stacked, but this time it's absolutely stacked. 2 points I'd pick out for you. One is Wednesday, the other is Thursday. Lisa, NVIDIA earnings on Wednesday. Then the big one for you, it's jobless claims on Thursday morning.
NVIDIA is obviously going to be very important. I don't want to diminish that. I think from an economic standpoint, though, jobless claims really goes into this question of how data point dependent is this market, given the fact that Fed Chair Jay Powell squarely opened the door to a potential 50 basis point rate cut as long as you did see a downward surprise. Key question, and we've been analyzing it all morning, and we will continue to do so, how big of a downside surprise does he need to see? How high is that bar before he makes a bigger move?
We're going to ask people what number, aren't we? Is it 100K?
It's going to be so exciting.
125K?
Exactly.
Median estimates so far in our survey is about 160. We'll find out. 100, 114 last
87.
time around with that too. 87 precisely
Exactly.
on the nose.
87K, that's it, 50.
The fact we're even joking about this, Conrad de Quadros of Breen Capital said it just moments ago. Because of that speech on Friday, whether this was the intention or not, it is the outcome. Market participants are hypersensitive now to one data point, the August payrolls report on September 6th.
What you pointed out was really important, and Neil Dutta did note this, that he didn't talk about gradual or in some sort of methodological kind of way in terms of rate cuts. So how much is this a Jay Powell question and how much is this a committee question? There still are some committee members who are pretending to be somewhat vaguely hawkish on the edges. But in general, people are wondering how quickly they're going to go. And then how much does the market move on that to one direction at a time where in the past rate cuts heralded some sort of weakness, right? At what point are we really looking for for any weakness or just basically taking the soft landing as a given?
Purely an observation based on some of the conversations we'd heard going into that speech from other Fed officials. This was almost Draghi-esque. This speech was. And the reason I say it, for people who weren't familiar with the former ECB president, the former ECB president had a habit of basically taking the whole governing council with him, whether they liked it or not, and basically said, this is my view, and guess what, it's yours too. And then they'd complain about it to various news outlets, including this one, but ultimately, he'd end up getting what he wanted. Chairman Powell, traditionally, the Federal Reserve is sort of a consensus builder, reflecting the consensus of the committee. That sounded like the chairman was speaking for himself. That's not my opinion. That's just a judgment based on what we'd heard from other Fed officials. There is a clear difference, just objectively, a clear difference between what we heard from other Fed officials on Friday versus what we heard from the Fed chair.
Just to build on that, will we start to see dissent, right? I mean, is this a time where he's foregoing consensus for getting his view out there in the forefront, or is he going to try to wrangle some sort of consensus? We've seen the longest consensus going back many years. A real question here about how much he really wants that versus an outcome that he truly believes in his core that he could potentially get ahead of a real deterioration in the labor market. I don't know the answer, but I do know that right now it seems like there is a bit of a division in terms of the pace, but not the direction. Everyone was talking about the potential for rate cuts. The question now is just how quickly and whether the data will disrupt. I don't know in terms of his personal opinion. He clearly, though, is more dovish than other members.
Would you like something contrarian from Ian Shepperton and Pantheon Macroeconomics? Something just a little contrarian. We think the data over the next few months will make market pricing look too conservative. I'll read it again. We think the data over the next few months will make market pricing look too conservative. We expect 125 basis points this year with a further 150 next year.
Too conservative in which direction? If you end up with data that encourages the Fed to go that deeply, is that positive for risk assets? I really struggle to understand this at a time when, in the past, Fed rate cuts usually were before the troughs in markets, that typically people recognize the weakness after the Federal Reserve started to cut rates. So if you start to get that data, are we talking about too conservative in terms of just how far the Fed will cut rates, or also too conservative in the potential weakness that you could see in risk assets on the back of that?
And that's the most important question if you're in this equity market right now. Equity futures up by 0.2% on the S&P. In the bond market, yields lower, particularly at the front end last week, by double-digit basis points on a 2-year. A bulk of that, the bulk of that, coming Friday after that speech from Chairman Powell. The 10-year down to sub 380, 379.33. In the FX market, the euro 111.71. German business confidence absolutely terrible. Just bad, 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 bad. And I'm not even overdoing it, Lisa. Just not a great read from the EFO index at all.
Yeah, it actually went to the lowest level since February, holding at that level at a time where people are wondering, well, maybe they're coming out of what has been essentially a recession in the biggest economy. Question here is, how does the European region face off with these dual risks that are very different? They've got inflation that's measured as higher than in the U.S. by some metrics, at the same time that you have growth that's weaker. And you felt that kind of tussle between those two European officials who were at Jackson Hole. They seem to be talking, though, more about addressing the weakness also, which means it'll sort of be a race to the bottom.
I imagine they didn't use this language. The EFO president, the German economy is increasingly falling into crisis. It's pretty punchy language, isn't it?
Yeah, that it has been stuck in stagnation for some time, and this is getting worse. That is what the data is telling us. What's the response to that, though, for Germany? It's not rate cuts. Is it fiscal spending? How does that deal with, the fact that they typically don't like to widen the deficit, especially at a time where borrowing costs aren't free? It becomes a real conundrum.
The German model just broken. 111.71 on euro dollar. Coming up this hour, Linda Dussel of Federated Hermes following Powell's pivot, Henrietta Trays of Vader Partners as Harris and Trump step up campaigning, and former Fed Governor Betsy Duke on the case for a 25 basis point cut in September. We begin with our top story. Fed Chair Jay Powell's speech in Jackson Hole sending stocks back towards all-time highs. Linda Dussel of Federated Hermes writing the following. The market is pleased to hear that Powell is keeping a close eye on the labor market and will perhaps continue to cut in order to stave off a recession. It's a soft landing if we have succeeded enough in reducing inflation while not harming the labor force. That is bullish. Linda joins us now for more. Linda, I want to understand if the leadership is bullish. So you've identified the same thing, and I think it's important just to spend a little bit of time on this. I think the bulls would identify the rally on small caps and regional banks and say, this looks good, improving breadth. Mike Wilson of Morgan Stanley was on this show last week, and he said, look at the performance in utilities, staples, and healthcare. There's a defensive character to all of this. How are you framing things for your clients?
Well, good morning. Thanks so much for having me back. it's basically it's a broadening of the market. And it's funny, you wouldn't normally think that small caps and financials, which are an early cycle play,